My friends, did you see the morning of the 13th? Is there something about 13? I don't know. Good morning. My name is Darren Hancock, and I'm your host today at the Breakfast Club. Wow, looks like we're going to be living off of Derek and his eggs this morning. No, I'm just kidding. Looking pretty good. Gotta love some volatility in the markets, hey? Let me just double check, make sure we're up and running live. And there we be. And there's my buddy Kirk. There's my buddy Kirk. As soon as I turn it on, there he is, right there. Kirk, what the heck happened in the market today? I love that opening, hey? Gotta love that opening. There's some volatility in there. Anybody who's looking to go long on that, got a little beat down this today. Seasonal tendencies, folks. Seasonal tendency. Check out your seasonal tendencies. Doesn't mean we're not going to go higher. Just means the seasonal tendency is for the markets to have a retracement February into March. Now, pulling your fib tool up in the range on the daily. Oh wait, we said we'd check out the lucky number 13. Taylor Swift's enjoying this day. Maybe. It's her number, right? I don't know why I have to know all the details of Taylor Swift. I think I'm not a Swiftie, but I know about Taylor Swift's lucky number. Is that bad? Is that because she's been playing with my mind there in the Super Bowl? No, it was the Grammys. That was it. Anyway, let's get back to this. I like it. We've had some good chatter there on the Telegram site. I like it. What's Michael up to? What's Michael talking about? Okay. Okay, sorry. Let me just get back to just looking over at the charts here. Let me move this to here. There we go. What do we got there? Move that along. Going here, 5. Oh yes. Trying to get my head around what I'm supposed to be doing. Here we go. Here's our morning numbers for drum roll maestro. We got Michael Wallace and Mr. Khan, and then the numbers again this morning. Blammo. Mr. Wallace up to 100%. Good for you, buddy. Adam Khan, Stan Hurley, Eduardo. Ooh, our main runners are just gone. Denisenko, where did you go? Where the heck did you go? You fell off the charts. You got 140 some odd percent, and you must be lower than 32. Ooh. Okay. Well. Darren Hill, come on, buddy. Get back in the race. Pull one out for England. Let's go. 20%. This might adjust the markets a little bit this morning with today's price action. Anyway, those are the standings as of February 9th, according to this chart. And we've hit the refresh button here today. That's the delayed Must be the delayed standings. All right, let's get back to business. See, we've lost this mean threshold, this order block. We're going into the rejection block past here now. And we're looking at 62% retracement right here into this. And I'm looking at this daily fair value gap, this inversion. See this reprice rebalance? Let me make this a little bigger here. You'll see what I'm talking about. Reprice rebalance. Open up this here. Is like a fair value gap. So I'm looking for this to hit off the edge of this, and we'll see what kind of reaction we get. Even a deeper retracement into the mean threshold of that. I'm looking for that as well. So we'll see what the downside looks like this morning. We also have this daily breaker here, and if we really blow through, we're looking for down here for the rest of February. Run back into here, run off these old highs here, back to this breaker maybe, and then look for a run back up from here, or hopefully look for something in here off this breaker. If that remains open, that'd be nice. I really don't want to lose this breaker right now. If we do, then we're looking for that. We got this little guy here. Yeah, it's a long way down. And I'm not saying that's definitely where it's going. We have to first take out this I guess you could consider this the breaker too. One, a swing below here. I like this one. Anyway, there's a lot of cluster of stuff in here. We have that little imbalance still. Mind you, we've worked it quite a lot by now, so I don't know if that's going to provide us much support or resistance. So we'll wait and see on that one. But it's still got more downside. That's my, I'm still heavy on it this morning, obviously. All right, so let's go to this all looks really fun for a nice little return when we start finding ourselves a swing point. And we get a retracement, man. We got some dandy liquidity pool to run into here. Alas, good morning, my friend. How are you? So we have on the we're hitting the 1 hour bearish order block now. Truth be told. So far we're in this rejection block. Right in here. With relative equal lows. Still feels like it's gonna be heavy here into this. I'm looking for right there right now. We'll see what we get from that. That will be so we're still looking for this area here on the downside. This is an observation sport this morning. Okay, let's go through some of these other ones. Dixie, what's Dixie? Oh, look at that. Off to the races we go. Dixie's finally making its run. British pound, look at that. Wow. Let's go with the daily. Right back to the order block. See how the run to liquidity, run quickly to liquidity, and then slam it down. Wow, okay. Mean threshold. Coincidence? Coincidence, folks? Come on. Even in that freaking news release, you can't get more precise than that. That's right off the mean threshold of that breaker. And then all those trend line guys, trend line phantom, blew right through them. Right to the bottom of the daily fair value gap. Finally done and dusted. We were calling this a while ago. Midpoint of that wick. I think we were calling the midpoint of the wick. I can't say that. I can't remember. You guys might remember it. Back in the sessions that we were talking about before on Euro, looking for this. I remember talking about getting down into this level here. I wasn't sure if I mentioned halfway through this wick or not, though. But anyway, it doesn't really matter. The objective's been hit. What's our next objective? Keep your eye on this inversion here. I'll draw it out for you guys. So those of you who are in Forex, keep your eye on that level. This is an inversion. This is not an inversion. This is just a fair value gap. Doesn't become an inversion until we get below it, come back into it, or above it now, come back to it. Once it's all been filled. We got some news events coming up. Yeah, so keep your eye on this level here. You want to see if this provides a level of support, or we just blow through it and continue down. American dollar launched. Got some equal highs here. The rest of that fair value gap's already been taken. Breaker. It was just running to the rejection block, which is right there on the daily. And rolling over, getting back into this consolidation again. Oh, we're just going to pop up above it, then come back into the liquidity. Who knows? We have to wait and see on the lower time frames where it starts to show us its intentions. This is good though. Don't get too upset about this. This is a great thing. We get to see some runs on liquidity. Volatility. Love it. All right. Your eye goes here to the Australian dollar. Obviously the fair value gap in here on the daily. Yen's finally hit our objective we were talking about the other day. That upside objective has finally been taken. Equal highs is next. We also have this mean threshold of this candle here, these little equal highs, and then that mean threshold rejection block. So keep your eye on each PD array. Like, don't overshoot and say it's going here. Yeah, it may be going there, but make sure you're covering yourself in terms of paying the trader on the way up at your specific PD arrays. So here's where we're looking at with oil. Oil, I wanted it to come down into a possible retracement here. So we got the first leg, second leg, and after that, I gotta admit, when you start to go to the third leg, you're really guessing on that one. So clearly, we came down to this objective here, came back up inside this breaker, and then it went through it. We have more upside now. Return to the session open and looking to push higher. So that leg was not the best choice, but that's okay. Can only guess so much into the future. So we didn't get the 62% retracement, which is good because we didn't even get the 50. Now this is what we're talking about. I think it's yesterday or the day before, how if we don't even get 50% of the retracement, you tend to come back up and through your consolidation. That's a really positive sign for a further upside, because if you can't even get back to your 50%, they have intentions of driving that higher. Again, easy in hindsight, right? So where do we see it? We have consolidation, breakdown below consolidation. So there's the leg that takes the low. Then we have an impulse leg, right up, close above consolidation. Then we traded back to consolidation. If you take the 50% from the high to the low of that consolidation here, you'll probably find 50% of it's right here, which interestingly enough comes back to the session open on that day. And then we have further run to the upside. So that is a classic entry pattern. We took this yesterday when it was moving up. Same kind of thing in NASDAQ when we were taking the run up. This was the same kind of principle, consolidation, leg that takes the low, pops it up again, return to the high of the consolidation, and then continue on to the upside. Order block, come back to the order block, right there, right there, and then take off, come back inside the mean threshold, and start pushing for higher prices. gold. We got the leg down, leg up, leg down. This one was more accurate. We're looking for down here. This big swing up would have been this leg here. This leg here would have been that first run down. Then the pump up, that would have been more accurate because it was even. So this little extension was a little further than I was expecting. Makes sense when you look at it now though, doesn't it? All those equal highs up here, come back, clean them out first before that monstrous dive down. So we can get rid of this. You would have to really kept your stop loss in the background. Mind you, as soon as you took those lows, I would have moved to break even anyway. Paid the trader. First objective hit. Then if it came back and took you out, you would have broke even on the last portion of your trade. And I got out of all my ETFs yesterday before this crash. So I lucked out there. Good morning, Abs, and good morning, Lori. We are still kind of watching the paint dry now. This is the paint running down the wall now. This was the overloading of paint, and it's just running, catching drips. So we want to see where this potentially runs out. So we'll see what the 7:30 or 9:30 open is like, and what's our news coming up for our news release. The news on Tuesday. Oh, that was the CPI numbers already. Done. Done and dusted. Nothing else today. We have nothing tomorrow or Thursday. Friday. Oh yeah, we do Thursday. Got a lot on Thursday. So interestingly enough, Thursday, if we're looking at Thursday as the Thursday reversal, and we do a nice little continuation on the downside here. John Doe, good morning. There's a new fella. Welcome to the family, my friend. Welcome to the community. Whereabouts you hail from, John? TK, there's my man. How's he doing? I'm doing very well today. Thank you very much for asking. I went to an osteopath yesterday. They do some rather interesting stuff. It's not as I come from a go hard, go home, no pain, no gain kind of career, right? Firefighting and EMS, you know, you gotta charge in there and do your thing. If you're stretching, you do ballistic stretching. You do hard stretches. It hurts. Yeah, good. Must be doing good then. An osteopath does not take that approach. Not at all. But it was probably one of the best assessments I've ever had on my back at all. Out of all the professionals I've been to, it was by far the best assessment I've ever had. But it's all about talking with your brain, talking to your muscles, and it was rather interesting because he was talking about the precentral gyrus in the brain. I was like, yeah, I understand what you're talking about. Talking about the dorsal root ganglia, the base of the spine, and it was kind of neat. I was like, yeah, I totally get what you're talking about. Makes sense. Nice having a little bit of an anatomy physiology background. Lambo, how's it going, my buddy? Lurker. Is that a place, Lurker? Or is that what you've been doing is lurking? I'm not quite sure what that. Been here a minute. Like your style. Thank you, sir. Thank you, thank you. Lambo, Lambo. As soon as I saw John Doe, I thought, man, first thing that popped in my mind was toe tag. Sorry, that's your. What's your last? Is that truly your name? Is John Doe, or is that the moniker you go by? If it is, then I apologize. I'm a paramedic, so John Does are always, somebody with unknown person. Oh, look at this. We're still driving down. Let's start chopping this up a little bit. See, we're kind of watching how this is kind of continuing down on the downside. Order block. We have an order block come back inside mean threshold of this order block. Down candle up inside the mean threshold of this order block. Look at this one now. We drop down below it. All the way down here, come back up to it. Base of it right here. These guys are all inside this dude. So as soon as we drop down below it, what do? Pop back up inside it here. Fair value gap. Just pop up inside, run down below. We go sideways for a bit. Then we come back up inside that fair value gap one more time. Drop down below. So we're looking for some support here. Come back in. We've come down and tagged that very level that we were mentioning that I was looking for. We've just tagged it perfectly here. So now, are we going to continue to drive through it, or is it going to provide a level of support here now? Very important. Yes, sounds awkward when you say it like that. I am originally from Chi, live in South Florida, former broker, now trade my own. I own a couple of pizza places and we make the dough. Oh, I love it. John Doe. Oh, I love it. Well, welcome. I won't be calling you toe tag then. We'll call you, you're going to be pizza guy. Welcome, John. Welcome. Hopefully I can help you out with some stuff. If I can't, we got some great, smart people in here. Let me tell you, there's some awesome guys in this little community we got here. We're trying to build it slowly but surely with nice, kind, caring people. We're not into trolls and stuff here. No drama. We're just here to help each other out, be kind to one another, and move this ball down the field of life, in a way that helps people out. Chicago. Nice. Chicago. I like it. I went through Chicago once in my... I'll have to tell you that story one day. The Chicago run. You guys, I thought people in Chicago were driving... I was heading out to New York from Manitoba in Canada. And I had to drive through Chicago. Holy smokes. It was bumper to bumper. I felt like I might... If I just turned my car to coast, somebody would have been... They were so close to my bumpers on both sides, they could have just carried me all the way through Chicago. I was like, holy man. It was like high speed, bumper to bumper driving there. If you build it, they will come. That's true. Tyree, my man from Zimbabwe. How's it going, my friend? And in the end, I come out break even. Can you help me with that? I've noticed that I have a problem with closing profits. This is Now the third time that I haven't closed the profits. I wait until the price reaches my target, but it doesn't work out. Yeah, you got to pay the trader, my friend. Got to pay the trader. I'll show you. I'll give you my idea for managing it, so you can manage it from two different directions, right? You can either manage it from the back end, or you can manage it from the front end. And what I mean by managing the back end is if you were on this, if you had a sell order here, like let's just play a miracle play here, you're on a sell side. You tripped in, and you took this dive down, right? As soon as it starts to break your lows, you can manage it from this end. So managing it from the back end means if your stop loss is sitting up here, the moment it pierces your first places that you want to start taking profits at, if your objective was down here, let's say it was exactly at 62% here, or it was right on top of that inversion that was mentioning, you can either wait till it hits it and you're out right there, or you, as soon as it breaks these lows, you move to break even, take a portion off. Next part that goes here, if it hits that, you move to your previous break even or previous profit place. These are just methods you can use to do this. Or you wait until you get like a higher time frame if you're trading on a higher time frame stop loss. So if you're here on your 1 minute and your 5 minute, first 5 minute low is lower than your 1 minute one, then that would be your first scale out. You'd move to break even, and then when you get to your second scale out, you'd move down a little bit more, and you just slowly look for your opportunity to say, well, it shouldn't come back to here. If it comes back to there, then I'm out. I'm okay with that. And that's that whole trading plan. You got to have the trading plan. So this is, right now, this is looking good. I like this reaction we had off that spot right there. This could be the nice, delicious little wick that we're looking for, a long wick for the day. Everybody's thinking, oh, it's all bailed out. No, we're still in the range. We've come into 50. We've broken to the discount array in a daily. So everybody's going, yeah, it's crashing today. Well, who says it's crashing? It's coming back to a logical level, which is your inversion. And we're looking for potentially more upside. Now, I could be talking out of my butt here. We could be just ripping back down. So what we're looking for now is an opportunity to see the elephant jump into the water. Now we've had the price drive down. Smart money's going to dive on this and start going back up the other way. So we're looking for a consolidation with an impulse leg, fair value gap, returning to that fair value gap or the top of the consolidation, or the price leg. So if this price leg is forming already right here, watch this. Well, we won't know yet. Oh yeah, we know right here. Sorry. Stand by. Watch. We'll see. Just see if this lines up with anything. And I'm just playing looky. Back to consolidation. So we have a body now. We've broken market structure to the upside on the minute chart. Look at that. Right on the money. I love it. So that's the leg that takes out the lows. We had a little consolidation here. Bam, we have the leg that takes the lows. And now we look for this run above. We have a body above. We've come back. We've traded to it right there. Oh no, we haven't. Just short of it. So if we come back into this here now, this is the this is what I've been telling you guys for weeks now. I've been sharing my principle of time. There's the 930 low. See that swing point? This is the Crazy Ivan. Watch the Crazy Ivan now into 36 to 38. Now this could be turning back and finish and continue down now. But I like the fact that we've broken the high here with a body, and we've come back and we've almost tagged the high of that. This is the inversion. Okay, I've got to start focusing here. We've got lots of fun stuff going on here. Sorry, I'm not kind of looking at your conversations just for a second. Let me just kind of get a beat on this thing here. Here we go. We got an inversion happening here. I'm going to tag the top of it. Look for more upside. Now, some of you might be piling in on this. Be careful. Be careful. I'd like to see it come back to that little tiny candle right here. And we'll try along. It's before 10 o'clock too, so. There's a lot of equal lows here now. See that? It's dipped in, found some support at the inversion. Gunshots ringing in Chicago. You got guns. It's hard for us to imagine. See, handguns are illegal here now in Canada. Now we just yell at people and then we apologize afterwards. Sorry, I shouldn't have yelled. We're so friendly up here. I'm good. Had a nice EU sell in London session. Oh, good for you, buds. See, Tyree's in an awesome place for trading. He gets to capture a nice London. He's bright-eyed and bushy-tailed in the morning, ready to take on those London sessions. For me, that's like 1 to 3 o'clock in the morning. The worst time for me to look at the London markets. So right there, I'm looking for a little pop onto here. There you go. Now if it starts eating through it, that's right there, it's through it. So you got this fair value gap here now. We could be looking for a deeper retrace. So be careful because this rolls over here now. They can still take these lows out. Where I get excited is when this fair value gap, and this is what we had yesterday, and this is what we jumped on. And if you want me to show up, I can dig it out for you again, the trade we took yesterday. When this fair value gap stretches up and opens up above here, then I get more excited about taking that long. But when it's below it, yeah, I like a body to get above that candle. And we did finally get one above it. And now we're dipping into this fair value gap. So we could now get some lift off of here. So you're looking for this inversion. Because see how this fair value gap inversion provided support? Then all of a sudden we lost it. Right? So that's got to make you nervous because that's a premium array. The only discount array we got left is this big wiki candle that we just had down here. And I think we're still premium array from here to here. Yeah, all we got's this guy here. That is not a discount array. It's actually a premium. So we've got to dig down to 50% or more. 50% brings us back into the top. See that right there on the top of that order block? We cut through candles. Lowest down close candle. That's what we're looking for. Nice reaction off of that. Nice reaction off of that. So now we want to see, again, this inversion to provide us a level of support. That's a nice reaction off that. So we're still waiting for something to happen up here. And I want to see it really clear these highs with some intention. This could be just one of those wandering consolidations. There we go. Cleared that high. Come on. Don't wake me up now. Wake me up before you go. Yeah. Start running. Close above. There we go. There's the close above. Lovely, lovely. Now we could catch ourselves a silver bullet here, ladies and gents. If this is the turn and we catch a 10 o'clock, mucho gusto. Run back up into this liquidity. Right here, it's looking good already. You want to see this whole price. You want to, yeah, you don't want to see that giving up. You don't want to see that giving up. Ugh. Chicago pizza, John Doe. Now we know where to go for pizza. We go to Chicago. Gonna meet up with John, check out his pizza, do a little vlog on it, do a little advertising. Come check out my buddy here, John Doe, here in Chicago. Derek's in the house. Morning, Derek. From the winter wonderland of Chelmsford. Snow is 8 inches. Ooh. We had 8 inches of snow last night. We had a little dusting here. Just a small dusting. My wife's so nice. She's like, sorry, honey, I didn't shovel the sidewalk to the snow this morning. She's heading off to work. Here I am reading charts. I'm like, what? She's so worried about my back all the time. I'm like, that's okay. We wait till spring. Just wait for it to melt. See, guys are logical. Why overwork yourself? Spring is around the corner. That sucker will melt. All that wasted energy. So we're consolidating here now. See where can you see where we're at? We're at this guy here, and we're at that guy there. So we're kind of banging around before we hit the rejection block here. So mean threshold. It's got to blow out of here somewhere. It's going to run out of PD arrays here on the 1 minute. The 1 second charts are running out. So there's your mean threshold of that guy. So we either have to extend down into the wick, back into this inversion here. See how that little inversion. Let me just double this thing up so you guys can, let's go to a clone. Again, still not in a discount array. Keep that in mind. See how it's finding support off the top of this inversion here. We've wicked through it already. Come back, find some support on it. Are we on and off? Let me get that out of the way. Clean that up a little bit so it's not so murky. I'll get this out of here now. Look at precision. Oh my God, look at that. Just tippy-tappy right off of it. Up to rejection. Look at that. Right to rejection. I tell you, I was looking at some price action this morning. I went back and started looking at some stuff. Just digging through some charts. And I was looking at all the places where if you don't pay the trader at the rejection block, oh man, you're giving up money. You're seriously giving up money if you're not paying yourself. Pay the trader. Don't listen to those people who say, go for the long bomb and screw it. Never pay yourself till you get there. That's retarded. Oops, I'm not supposed to say that. My wife says I'm not supposed to use that word anymore. I mean, it doesn't make sense. That's what that is. Pay the trader. Okay, Look for inversion to give us some lift. We've got a lot of noise going on right now. Keep hitting this rejection block. You're bashing around inside here, so whatever you're, let's go down to the 1 second chart. You'll see what I mean. Let's go to the 1 second chart. Consolidation, impulse leg above, come back to the top of the consolidation. Run back up, make out some new highs, come back into fair value gap. Run all the way back up, clean these highs out. 50%. If you pull the fib tool from here to here, you'll see that that's 50% inside of a discount array. Run for the highs. Pull back into the range again. You have to take out either the low here because you're in a longer range here. So you're going to come all the way back to that little discount arrays down here. Look at them. They're all just delicious. Smash around in them for a bit. Clean the high out. Consolidation. Run out the high. Make a fair value gap. Find some support at the inversion. More support at the inversion on the 1 second chart. Reaching for fair value gap. Look at that. Perfect array. Prime array. Come all the way back down inside order block. Take out the highs. Now we're retracing back down. So breaking market structure to the downside. Come back up. Find support inside the breaker right there. Find support. Drop down, come back up, inside the order block. Inside this would be a swing here, I guess, another breaker. Top of the inversion on the 1 minute. Watch the lows. We take out the lows, come back into the low again. Consolidation. Let's get back over here. Let's try and watch this as it happens now. Let's see if we can follow this on the 1 second chart. All right, so consolidation, break up. See it come back into it. Start getting some lift now. Order block. Keep going up. Take out the highs. There we go. Come back to the consolidation. Get some lift. It's like we can read it as it's happening, right? Okay, let's get back into the 1 minute. Once you start seeing the charts moving cleanly, that's a real good. I watch it. That fries my brain. It's like, man, I got this way too many things I have to take in there. But anyway, you kind of get the idea. So slow it down a little bit for us 50-year-olds plus. That was a lot of mental energy trying to read that. So order block inside the fair value gap inversion. See how it found the top of it inside the mean threshold. Taking the low, looking at the long range here for the discount array. Look for 50, 62%. Look for the mean threshold of this candle here. Chicago's cold for me. I bet. 78 here. What's that in Celsius? 78. That's above. You're definitely above freezing. So you're probably around 10 degrees or something, aren't you? 12 degrees. Markets got punched hard today. Can't imagine move up from that. Time will tell, I guess. Well done, Darren. Yeah, that's I was in Lauriston's territory there for a moment. Oh my goodness, Laurie, you spend a lot of mental capital, my friend. It's a good thing you're young and vibrant. I could spend a few seconds in that chart and go, oh man, my mind's just ripping here. I'm burning sugar. I am burning brain sugar. Okay, so let's look at this thing here. So if that was our, well, we never did get to 50%. Top of the consolidation again. So the bodies of the candles respect the top of the consolidation. Good, this is what you want to see. A nice little impulse leg, get above this now. Now this is delicious. This is what we're looking for. Hello. Now give me a fair value gap here, folks. Give me a fair gap. You guys see it? You see her forming? Don't give me a wick. Don't give me a wick. Hold it up. Breaking structure. Oh, now give me a fair value gap above this. Am I asking too much? Am I asking for too much? Yeah, I guess it was. Let's wait for our 10 o'clock silver bullet, shall we? One hour fair value gap on the NQ interests me for a short. New week opening gap last week. You want to short this? On the 1 hour, you say, hey? Let us have a look. Lettuce and tomato. Have a look here. 1 hour fair value gap. For a short. Okay. So there's your fair value gap. That happens. It didn't happen above, but there's a fair value gap. Find support at it and off to go. Pay the trader. The first part right here. If you're getting in here, there's a 58 to 60, 84. There's 20 some odd handles just in that little run right there. And in this kind of volatility, this kind of nutsiness, you got to be super sniping your trades. You don't have to. You do what you like. So I like this little short-term low that's formed here. We have a low, higher low on each side. Finding a support at specific order blocks. I like that. We're finding support at the order block. Consolidation now. I like that. And we're coming up for 10 o'clock, so we'll see if this suddenly rockets down on us, or do we get a nice little silver bullet entry for a long, or a silver bullet entry for a short, if Derek's off of an hourly fair value gap. Are you trying to get off short off of here, Derek? Or are you looking at one that's further back? Valid order block now. I want to short it as well if I get confirmation. You'd have to get below this low, come back up inside here. Use that as your, is that where you're looking for your confirmation, Lori? Because you'd have to take this low out if you're looking to go short. Right now this is still supporting upward movement. At least that's what I can see. If you guys see something different, let me know. Mean threshold, holding. Come back into that fair value gap. Oh, you like to see it stay open? Here's 10 o'clock. Right now, let's just return to all these equal highs up here. You're finding support off the top of them. I want to see this really start to get a lift out of here now. Create a silver bullet, so like a fair value gap, silver bullet entry for a long. Or you want to see this just suddenly shoot down below here, create a gap, take this breaker out. For me, to start thinking short, I'd have to see this breaker here get taken out on the downside with a full body. Mm-hmm. 50% puts you just back into that inversion or that fair value gap one more time. If we get 50% fill, that would just take out those lows there. Pop in, leave it open, continue up. Let's watch what she does. Okay, so that's what I like to see. Hold that. We're inside this cluster here. This is now a valid order block. Holy smokes, I don't think I've ever had 24 people at one time. Welcome, everybody. Waiting to see the reaction at the 832 fair value gap 1 minute chart. If it closes above with efficiency, I'll look for a long. just pop below. Okay. Okay, I want to see a big run through here. If this is going to go short, I want to see it, not just a and I can't take that as a silver bullet short yet until this is just a return to fair value. We'll see where this closes up. Is it above or below this? And we're just using the wick to come back into the range. Get this out of the way here so you can see it better. Mean threshold. Sorry, consequent encroachment. Now you see that one? You wanted to see, I wanted to see that lift right up and out of there. See it get right up. So you got 22 seconds. You want to see it start to pop up and the body close above here. Unless it's going to come down and just finish off the little itty bit of fair value gap below us. It's still no decision mode yet until unless you're into support, push higher. Like that will be a 1, 2, 3 entries for a long stop loss sitting right here. Because if you lose that order block, that's the breaker. If we lose it, then we're definitely wrong. There's a little fair value gap in there. That's what I want to see. Now you want to see that close above that now. Give me a nice body above. There you go. Alright, now I want to see this create a little fair value gap in here, and that's my silver bullet. I'm going to take that for long. Not saying anybody else take that. We're in a consolidation or just coming out of a consolidation. I'm finding levels of support here that make sense. That inversion fair value gap, I want to see it hold price, but it's going to create a fair value gap silver bullet for me here. How's that? Let's do a little buy order. It just sat on me. I want to see this mean threshold. I don't want to see it lose it, but I see that there's the potential for it to come back to here. So maybe in. See, you close below the mean threshold. That still on the mean threshold here, kind of like overlapping here. So we've had a body close below here. Now if this lifts up in here and starts to roll over again, I'll get out before it hits my low. I want to see it start to get some lift out of here now. Stop loss is going to go here. I don't want it to revisit this again now. I'm looking at this order block. We've come back to the rejection, inversion. I want to see this continue up now. We've got little probes here which concern me that this is not really getting a big power lift here. We've definitely closed above again. Tap into it. Start going up now. Mean threshold of this candle. I don't want to see this low get taken out again now. I don't mind being wrong. That order block, I want to see that hold. This order block here, mean threshold again. I don't want to see it double tap in here. This has to hold. So I'm trying to develop a trade idea that if I'm wrong, I want to really minimize my losses if I'm wrong. I'm looking at these order blocks and I want them to support price now. So if we start chewing through these, then we're probably going to come back all the way through this. It's kind of hinging on this mean threshold to hold price, and I want this top of this inversion here to support price and continue pushing higher now. And I'm in the I'm down in consolidation here, so this is not a really great place to be to make a decision. Nothing's clean here right now, so that's why I'm saying don't jump in on my trade. I don't know for sure where it's going. If this has got intention, it's got to start making it soon. What are your intentions with my daughter? Young man, get out of town. I like the probe. Build some resistance off of here. I don't like this at all. That 3 times we got that mean threshold being hit. Yeah. Get ready to close that. Sitting right on top of that inversion. That's going to go down. Come back up to my order block a bit. Cut me some, reduce my losses a bit here. Or it's going to take me out. Yeah, it's not good. just hoping this rejection block now is my little desperate hope to hold on. We're in this little consolidation, building a block off of rejection block, and hopefully having a run back up, cut some of my losses and get out. Otherwise, yeah, it's going to take me out now. Yeah, it's out. I'm all right with that. I'm okay with that. See, if it doesn't give me what you're looking for, then for sure you got more downside, right? That was worth a try for a silver bullet early. It's that consolidation. Back to here. Wait for something clean now. Wait for something clean. They're all trying to catch up to the big drop in NQ. Yeah. You see what I mean by if you've got a plan and it's not working, then you should have a line in the sand. You say, well, it should not break this. If it does, then I'm wrong. See how we have a break below these lows, body, come back up inside them, inside that little fair value gap for a short. So there's a silver bullet. Remember our 14, 12 to 16, 16, 17, 18. There's your 12, 13, 14, 15. Return into it, 16. Short, aiming for here. Rejection block. See, they don't always give you the low right away. They do give you the rejection though. Look for a run to here. So the body ends up on that one. Right back to here. Inversion. Look at that. Making a nice little bank of cash down here. So we got engineered liquidity right here. Getting some clean action here. We'll end up getting we'll catch this. We do really well when it gets into some clean price action. So you're going to see this order block right there above you, the mean threshold to give way for going to the upside. There you go. We're pushing through to these equal highs again here. Now if they roll over here, more engineered liquidity below above. All this stuff is just a lot of people going short right here. I want to find support here now. So even if I kept that in here and I put my stop loss, yeah, if I put my stop loss down here, so that for me the management inside here, that was a nice deep discount. Holy smokes, right through the breaker held though. See how the mean threshold of the breaker held? We dug down into the wicks but did not take out the low. That would have been a super tight squeeze had the stop loss been sitting here. And then you'd be in profit again. Something to think about for my discount array right here. Super discount array. You'd have to take that out to go look shorter. Didn't. Though this is the spot right here. We have a fair value gap above this breaker. So if I get a rollover here back to this breaker here now, I'll take this short again. These equal highs here. Sorry, I'll take it long. We've got a fair value gap, consolidation, breaker inside of a fair value gap. Now in a nice little discount range. We might even come up to there-ish. Let's go to, nope. $62. 50% puts us here. We may not get in on this now. So, lesson to learn. If this is the breaker, I'm in the range. Should put my stop loss below the low. Would have been a tight squeeze. I probably would have bailed out anyway, just because of my chicken nature. But lesson to learn there, if you're going to go for that long, stop loss goes below the low. I was trying to work this here. You could see it was failing here. Probably just run down here. Oh well. That would have been a nice little cash cow would be in right now. I would have moved my, had this been my stop loss down here, I would have, the moment we broke these highs, I would have went right to break even, probably moved it into this fair value gap here. Now that order block there, you want to see that hold price. See, we haven't come back into it yet. That propulsion candle, you want to see that hold price and propel price even higher. Sometimes if this is an objective to reach back for, what you'll see me do here is just kind of take my fib tool and push it up above the level here, and I just line it up with what would be a nice 50% or 62% retracement. So I start off with 50 and go, what would 50 look like if we had a 50% retracement of whatever leg we've got here? So that would be an upside objective to reach for if that's my downside objective to get in. And then you go, no, okay, now if it's not 50, what about 62% retracement back into a logical place for a breaker return? Or equal highs. You could start pulling the 50 from here if you want. And the 62 kind of lines up with, and the 50 line up with one another. 62 is here, 50 is there. So is that a potential upside? So sometimes I like to pull my fib tool like that just to see how well I can line these up with an objective that makes sense to me for a retracement back in for a discount array. That'll kind of give me a feeling, and then I'll look for price, I'll look for time, price, and then a potential retracement. Not that it's the right thing to do, it's just, I'm just trying to look for ways to follow the algorithm tight. Get rid of these guys here now. Clean that up a little bit. This is too much. I took entry market, bounced right there, and I quit with a loss, then went for take profit. I can't say what I want to spell out of my mouth. Darren, ever heard people say that firefighters are not sane because they run into fires when everybody else is running away? Yeah, well, it does take a bit of a well, I don't know what that would be when people are running out of fires and we're running into them with a big smile on your face. If you actually listen, if you get really close to a fireman as they're running into a building, you can almost hear them giggling. Yeah, there's something kind of nuts about that. Do you ever have people say to you, oh, they call you mattress backs or hose jockeys? They get so many different names on firefighters. So if you're like a okay, that theory, see, not a very strong theory, obviously, not a really strong technique for assessing price. So now I'm looking for 62% into here, maybe. Anyway, we'll just wait and see what happens. So I got the long, but managed my stop loss incorrectly. Stop loss should have been down here, and then I could have caught that silver bullet run. This would be all giggling profits right now. So you can see I talked myself out of a trade here looking for mean thresholds, but you see how they didn't hold, which told me as soon as they start to give up, I go, oh, we're going lower. But this breaker should have caught my attention. I was too busy going, you screwed that up in front of all these people, bozo. And didn't look for the discount array and the breaker as a potential hold. And look at that, right on the mean threshold of that breaker. It held. The bodies of the candles respected that. Wicks did the damage. Didn't quite take out the lows though. Did the run up. But we're not in the trade, so who cares? You got to go back and analyze, where did I go wrong in terms of how did I manage that trade? I got the prediction right, but I managed it wrong by stop loss. And to be honest, that squeeze would have made me buckle. Would have played chicken with the train all the way down there. I probably would have bailed out right there, and then it would have popped up and then took off, and I would have been spitting on the monitor. That's the likes of Stone Cold Steve Austin. You gotta have, you're staring down the train, playing chicken with the train there. That's okay. Used to have people say to us, oh, you guys, all you firefighters, all you do is sleep all night. So no, I went to a rollover, a couple of rollovers last night, and a gas leak. And you look at your buddy and he's smiling at you, which for us means I rolled over from one side of the bed to the other side and farted once. Went to a gas leak, a couple of rollovers. Yeah, Doma Sherpa, it's a tough, when you're in this kind of consolidation, it's kind of a dodgy situation to be in, right? Well, you can see this low forming here, and it formed perfectly off that objective we're looking at here. The problem is saying, where do we find that? Where does the inversion find support? Oh, look at this guy here. I didn't even see that guy again. That's too far over this way. Look at this. I'm just looking for more reasons for why I should be focusing a little tighter. See this? There's your inversion. Come back, tag, went through it, come back into it one more time. Wicks do the damage. It provides support. Premium. This should be your discount array. I bet you that's the discount right there in terms of that whole range extended up. Look at that, 50% right on the beezer. Didn't see it. Did not see that. See the range, how we keep extending the range up, and you keep looking for where's a discount array that would support price. I'm too busy looking here and at this breaker, even though the breaker is inside this guy here. There's your discount, 50%, right on the money. Just popped in there to get its little discount, premium discount, and then off to the races it goes. Ugh, damn. Didn't see it. Didn't see it. You guys see that? Does that make sense to you? Logical sense? When you keep extending the range, you got to pull the whole range or the short range. Well, the short range was here, back to here, drive all the way. This became that small little range I was looking for continuation, finding support off this. You start losing it. Ah, crap. Well, where is it reaching for one more time before it takes this big run up? Is 50% of the range it's now created that you're trading in. Just popped into discount. I'm out of here. Didn't see it. Didn't have my charts opened up wide enough. Let me move this. That's okay. That's okay. Don't beat myself up. Oh, you can recover it. Send in some love, buddy. Send in some love. Okay, so what if Mm-hmm. 11 o'clock. If we start making the high around 11 here, there's a typical retracement between the low at 10 o'clock or 9:30 and 10 or 11, and then there's a retracement that occurs 50 to 62% for a further upside. So 62 puts us right back at this old consolidation here. 50% puts us just above this order block, and it puts us just at the bottom of this inversion here. So if we go sideways for a little bit, pop up at 11, start running back down into this range here, 50, 62%, brings us right back into here. So we'll see what happens here. Do we get a bounce off of here? Then I'm done pulling this fib tool up here to try and find a potential retracement spot. With 50% line up right on there. Right there. You're waiting on something to happen. PA is not attractive today. Darren, do you have Thinkorswim? We can't get Thinkorswim in Canada. It just adds a tick value to his candles, and it makes it a lot more cleaner. Like you could have Probably seen something very clean in here if you added like a 4,000 tick value for each candle. You'd see the algorithm clean up. I'm not going to beat myself up on this one because I know I probably would have buckled right around in here anyway. So that's where you have this break in structure again to the upside with a breaker inside a fair value gap. Get all excited about that one to go long. And we didn't get it. But that's okay. So we're at the mean threshold here. What does that do for us? Well, 70-75% retracement in there brings us back into the consolidation. Where's the carrot? Oh yeah, that's the problem. Sherpa, you're right, buddy. That's the problem. Where's the carrot? We didn't have the carrot. That's why the whole market's going all screwy. We don't have the carrot. It hit our carrot up here. We gotta tempt him to come back a little bit here. Forgot all about the carrot. Carrot over here. Nasdaq loves the carrot. Well, we won't be getting any any new subscribers today. If I would have caught that one, we would be laughing right now. Oh well. Jesus, you're not getting anything here. Order block, pop up. We don't even come back to the old high there. What's the high on that? 757. Low. 757.25. Oh, you might have tagged it there. Who's going to take it long there, though? We could turn that wabbit into a meat eater. Did anybody see if there was any meat in this one? Got the turd. Got the turd. We can put the turd in there. Where's the food section? Bugs. Oh, this is bugging me. We could do a bug. Oh yeah, there you go. Little T-Rex. They're meat eaters, aren't they? That's the market over here. T-Rex just eating people up. I wonder if actual stock traders do this when they get bored. they start drawing all over their charts with little creatures and carrots and stuff. I'm wondering, can you guys see this? If we don't break that low, is this the next price leg up? We're just coming back into the fair value gap here. You're between this one and this one right now. We want to see the mean threshold give way here. Get out on top of this daily fair value gap, find some support and continue to the upside. You want to see that mean threshold give way though. And I don't want to chop that out of there. What's going on back in there? We got that guy there, hey? $17,807. 17,807. See how the mean threshold, the body holds right on the mean threshold, wick comes up, does the damage. You want to see this thing, is it going to hold price now? Old highs. It's got to push through here, get on top. If it blows through here, we want to get below here, find support on the downside, and start pushing through so we can take this out, eliminate that whole price leg idea. For the 11 o'clock, this is, we could get a nice big deep retracement back. We're overlapping right now. Ready to come down. Inversion. See what the inversion is right here. Keep an eye on that spot. We want to see that downside give way with a closed candle below it. There you go. So now we've got this inversion right here. It's good. I want to see that. Now we can come back up, find some support at it, and continue on the downside. Get below this daily fair value gap. Now we've worked the inside of it. Pop down below it. We could just run back and forth inside it like this. With 11 o'clock. What is it? We've still got another 11 minutes. Making one more little poke above the high. Mean threshold of this candle. And we really haven't had a body close below here yet. With wicks do the damage. There we go. That one closed below. Come back up inside. There's the high. Mean threshold. They come back down. Nice. Tell me this has anything to do with news. Tell me this has We just called that precision of key levels we're looking for. If you think this has anything to do with news and manipulation and all that crap, it's literally the algorithm bouncing off of key levels we're talking about. Now you want to see it come back, find some support off of here. If it doesn't, just drives on through. We want to start breaking this low here. The retracement back into that range we're talking about, right? It's doing it a little earlier than I thought, but that's all right. That's the wick forming of the 17 17 candle. $16 candle. And don't worry about that 16 thing. That's an MT4, MT5 idea. So we want to get back. We're back to this order block here. Come back up, tag here. Inside that fair value gap, we just filled it. There, we tagged that daily. We want to find some support at this, roll over and start coming back down. Or this could be really crazy. This could be the big run up. If we start blasting through this right now, that would be a really interesting long price leg for a run on the day. We'd have to lose the mean threshold of that candle and that one. Right now we're back into that inversion again. See that right there? We're tapping it again. If you pull your range from there to there, or from the high, if you want to do the high, 50% is here. 62 still keeps you inside that inversion. See how the bottom of this fair value gap daily is a discount in that range. You want to move to a premium, you got to get above 50%. There's a premium array right there. Come up, tag it. Now we're between here and whatever we've got as an inversion on the premium side. So if we want to continue going down, this inversion should hold price. If it doesn't, and we've got this as a short-term swing, then you're looking for the fair value gap that just formed right there, tap it and continue to the upside. And when you can argue both sides of it like this, what do? You stay the hell out of it. So for me, I want to see this kind of give way now. Let's just continue rolling over and coming back down below this mean threshold here. It's good. And as soon as that happens, see how that instantly becomes an order block? The moment we break the low, it validates it now. Now I want to see this kind of give way. Come back, find some support in here, and this becomes the new inversion. You see that? See where this one closes up now? You don't want to just see it sitting here. You want to see a big bull candle pop through the bottom of that. There you go. Nice. So now we've got order block. We have a little fair value gap going to form in here. Nice. It smells carrot. It smells carrot, boys. It smells the carrot. Again, continue to build your narrative around support of these candles. It could go up, it could go down. I know where I'd like it to go. I'd like to see a retracement that typically happens in this hour. On the hour that's, you know, if this was the previous run up, this hour is a typical retracement back into that hour, 50 to 62%. So pull your fib tool from the bottom to the top. Here's our carrot. It runs for the carrot. There's 50% right there. Now this is that part we were talking about before. If it just comes into here, doesn't hit the 50%, and then starts to leave, that's more of a positive sign for this massive price leg to continue to the upside. You see what I'm seeing here? There's your leg up. You come back, you don't hit that 50%. That's a sign that we're looking for further upside, and it's a stronger indication for further upside. So in other words, if this fair value gap holds price and we don't hit the carrot, look for upside candles to break to support this possible idea. If we close below it, then look for the carrot. I'll draw this here. Now, again, I may, what do I know? I'm just guessing here. I'll be right back. My coffee's doing its thing. This is fine support. See that? Right off the order block. Now we want to see if this fair value gap actually starts to provide support for this run up, because we're still not at 50% yet. So this is what you want to see in terms of, is this got strength now to push this next leg higher? If that's the case, draw your fib and see if you, or draw your leg from here to here, and then you project it from here up and see where you end up. See what you guys come up with for a price. And again, these aren't carved in stone. So right back up to yesterday's, or another daily fair value gap at 17,885. That's where the carrot should go. Ooh. Ignore that for a second. Be careful in here now. Breaker, fair value gap. Second level of distribution. This could be a unicorn hammer. You want to get through this to the other side. Smart money reversal, distribution, accumulation, second level of distribution, anxiety away. A big bold down candle, because then if it gets below here and we get back into that, look for the unicorn down. Like this looks like a second level of distribution here, or accumulation off this order block. There's a swing here, breaker, last up close candle before you swing below that low, taking out these lows. So, and we're sitting, the bodies are respecting that fair value gap, the mean threshold. Be careful if you're unloading, take some off here, or don't. It could go long on you. I don't know, so I can argue both sides of this right now. So are you long on this right now, Lori? Get up there. Of course. Of course I'm long, he says. Rejection. You don't want to find support off of this and start coming back down now. You want to see it start blowing into here. No little candles. Get on top of this guy. Bold candle. Finish up high. Come back and tag it. And run. I like the fact that we're eating through the mean threshold. There, you've got to close above now. I like that. Tap it. Go, go, go. That could be the long right there. I'm going to go along with you. Now that I've seen that we're above here, I'm going to go along there. Put my stop loss down in here. Where are we going to put that? Below that guy. We got to get through these two though. Find support at this. Ideally, you don't want to see this order block give way. We want some big bold candles here, not these little tiny popcorn fart ones. Because we just took out that little high right there. What if it had come back down to 50%? Well, it can come to 50% and stop, freeze up on there, and then go up higher, which is what we're. But if it doesn't, which is why we put this guy here, if we get support at it, then there's more a positive upside run, and this is just a pure speculation. Don't hold any of that as gospel. We could just roll over here now, turn around, and still take us out. This has to be the support, though. If we see a body close below this, I'll get out, because I'll be wrong again. The wick can come down into here. And this might be a stop loss management problem for me today. So that's what you want to see, is kind of find some support off that, right? And start to, you don't want this little tiny dinky candles. We just ran that little high out there, so that's my concern, is that are we just going to roll over, look sideways, roll over and come back down? I'm going to move my stop to here now because I'm not happy with what it's doing. Yeah. Yeah, it's going to take us out. It's going to take us out. Going to get out. Not clean. Not super clean. We're still inside that range. Candle. Come up, find some support at this candle. Turn around, come back down. You got this little fair value gap down here still. premium discount. You got a little fair value gap down in here still, premium discount. So if your stop losses, you still want to try and here. 62% puts you a fill of that fair value gap there. And then after that, what have we got left? But this order block here, which is now a breaker because it took that high out. So this is good for support, but we may come all the way back down there, and I wasn't prepared to let my stop go that far. It would have taken me out right there anyway. So order block again. Yeah, it looked like it was buffering. I've got this on another computer, and it looked like it was kind of spinning around there for a while. It was buffering, so I see what you're doing. You're getting there, Abs. We're below this candle here now. See that? Why does this keep... So that order block there, we gave up the ghost on the mean threshold of that. It would have been fine, but see, we ate right through it. Now we're finding some support off of the mean threshold order block. So it just feels more heavy for me right now. That's why you got to get out. Now we're looking for this little tiny fair value gap here to provide a level of support. Now we've got a body that's traded below this inversion. You know, rock it up. Give Lori a chance to get some cash here. Get some money. See, back to the order block again. You want to see this provide support here. If it doesn't, there's the bottom of it right now. We're getting right near 50%. You want to see that just pop on it and go. If you're long, you want to see that go this price leg now for the upside, because that price leg, if that ends up being right off there, that's the high 803. There's the 50%. Just moved into a discount. That's all it needs. Now you want to see it go. Get out of Dodge. If not, we're looking for the 62% guy sitting down here. See, those are the kind of things you have to ask yourself. Every time this is moving down, you say, what supports my price and what doesn't. If it doesn't support your price, get out, wait for a new setup, because it means you're on the wrong side of it. And constantly we watch each candle and make sure it's validating. If I want to go long, I want to stay here. It's got to be above here. If I lose that, then am I willing to let it go down here? And you don't want to be just trailing your stop loss down, looking for new reasons to support or marry a long if it's clearly not going to go long for you right now. If you're willing to weather that out and put your stop loss down here, then that's a trade idea, right? You're looking at this breaker to hold your price now. So if it does come down, it could come to here and then turn around and come all the way back up for these relative equal highs and take those out and start running up higher. So we're coming back into the breaker now. Get rid of this. See, there's a little tiny fair value gap in here. So watch. If it goes through 1, 2, 3 arrays in one candle and closes, your ass is next, as Michael would say. So So this was the, when I was talking about the unicorn trade, not quite until you come back up to here. If this was the first level, second level, if the second level was there and not there, this is the drop that I was concerned about, but I was concerned about it right here. It went up to a higher order block, or a higher breaker, I should say. That's a breaker. Swing, taking that out. This is a breaker, taking this guy out. That's a breaker, taking that guy out. So if this continues booking her down now, that would be the second stage distribution. You want this, see how that fair value gap we just mentioned, it came all the way through that, right back into the candles open. Now you want to find support here. Keep in mind as well, we're now compressing. So now you pull your fib tool from here to here. As soon as this candle closes, pull your fib tool from here to here, and rinse and repeat. Where's my PD arrays above and below? So here's a discount array, and reprice, rebalance. That would be my next idea for here. Order block, inversion. Yeah, it's just over 50%. So breakers holding. Now, Laurie, did you have your stop loss sitting below here? Were you willing to weather that kind of withdrawal back to the breaker, find a level of support at it? Because now this candle here has we have a little tiny imbalance right here. We validated it right there. You want to see that hold price now and continue to the upside. So now we've got a swing projections from high to low. Pull your fib tool, look for at least 50% of that range. There's a premium inversion and a discount fair value gap. Fair value gap's been hit. We're starting to eat right through this thing again. Watch back here for this. If you lose that mean threshold, you got more downside. And if you can argue both sides of it like I'm doing here, what do? You stay out. Unless you're in this for a longer haul and you're looking for this to provide a level of support and you're looking for a run up above these highs, you want to see that mean threshold hold with no closes getting below here. Wick's fine, no close. You want this to start turning into an inversion, and you want to start eating up the 50, and then you're start to feel real good about yourself when you start getting through this inversion again one more time to the upside. But remember, that's a premium array and we're compressing, so if it hits this, it comes back down, look for the next little range here. So that would become an order block that you'd come back to find support, either to go up to the next little one that's in here and so on and so forth. And you can just see that starting to form already. So there's your SIBI. Get above it. Look for a new price leg down as well. See, I'm seeing here, and this could be a price leg down into this range here some more. Could easily argue both sides. So in order to support upside movement now, you want to see this provide a level of support. Now we've got a body. There's your close above. There's your 50%. There's your inversion. we go. Order block's gone. We're inside this inversion now. You want to see this get on top of it now. Not just drive a wick into a premium array, turn around and come back down again. See that reaction off of that? Just wicked up in there to get a premium array to turn around and come back down. Up in here. See that reaction off that poppet? I love that. Now if we can drive through. Yeah, that's just a quick run up into a premium array. Isn't that delicious? Look at that, 62% of that little range. We're talking about it compressing. Running for a premium array inside that inversion. Nice. Now, we have actually traded. Oh, we've closed on it. We went above it, closed on it. So we'll see what happens here. Are you going to push back up again? Wick did the damage. Back into the order block. Open down here. Last down close candle. Now you want to see it get above here. If you want this to go bullish some more, you want to see this candle fill in again and get above there. Making this a breaker. Apparent breaker of that run. You've got this and this premium. Ugh, really, all you got left to do now when you've got nothing but wicks left. Nothing but wicks left. 62%. Start running. There you go. Find some support above here again. See the body's closing on that. Find support here. Continue to push forward. This is good. Breaker's still holding price. You're still inside this little range here now. Looking at that inversion again. What's it doing for price? Yeah, we're still closing in it or above it. So you see this kind of push down now. Let's look for I love the fact that we're digging into here now. So this is the potential for further downside. We've eaten through two of these candles. Did a little swing below here. That little inversion's not holding anymore. We shouldn't see that close. We should see that close below here now. And there you have it. Now it becomes a different scenario. Just because of that candle, we have a different scenario forming now. Now I'm more heavy. We've come back into imbalance again. Order block. We want to see the mean threshold. Hold that. If that doesn't, then we're back into this again. Rejection. Premium. God, there's nothing else down here other than that little inversion there. We're still inside this range. What are we inside there? 50%. Back into this again. A little imbalance right there. Premium discount. We're just hanging around that 50% of that range right now. I want to see it get below here now. Use this candle as a support. Otherwise, we're still inside that guy. 40 hit the rejection block. Never took the highs. Look for this little guy down in here. There to there. See how we're reacting off that? Let me get rid of this here. See that little fella right there? Right on the beezer. Now we've got this guy who's providing support, so you still want to come up to here, find support, and continue down now. Look at that, right off that bloody mean threshold. Snap! Right off the breaker again. See that? Come back down to the body. Or like the open there. All the way back up into a premium array inside here. All the way back down into a discount array. The mean threshold. This guy here, if you lose this, then back into that higher range. We've got upside here. What else you really got in here? That array again. And that up close candle right there. I like that snap off of that mean threshold though. We could just be running sugar wick to wick now. 62%. 70% puts us right on the rejections again. 79% puts us here. Coincidence? I don't think so. Now split your wick up into quarters, whatever you guys want to use for your wicks. I still think we're going to go down below this low now. We had a breaker. We had some fun in. We got to play inside the breaker for a bit. Now, if we lose the 50% of that wick on a close, there you go. Here, find some support, continue down below here. to this order block. As soon as you see it start, came down here or popped up to 62% of that range. Then we started degrading it back down. Support off this candle here. We want to see us get below this candle right here now. And then ask yourself, when does this narrative change? And I got to look at a higher, instead of this range here, I got to look for a higher range now. Well, as soon as that mean threshold gets taken on a close, then we're back into that little crappy consolidation again. Then you look for what candle now supports price. And it would have to be this one here if we break above the high. Because the only one we got is this one down here. So to me, this is all showing more heavy than it is showing anything to do with light. So unless we break this candle's high now, we've got to finally got a down close candle that if we get on top of it and above this mean threshold here, then I look for that one saying, oh, now does this one, now it's valid, mean threshold, rejection, it's good. Now we're through the midpoint of this. See where it closes. Through the midpoint of that. And we're into the midpoint of this one. Through the midpoint of that. I like it. Good. So now this one, you look at support here and support here. There's a little swing point. So you want to see a body break above that. Nice. Beautiful. Don't get excited yet. This could be just a nasty wick. So we wait for it to close, 2 seconds, and bang, perfect. Fair value gap former here. That breaker mean threshold, again, could be holding our price for a further upside. So we were going to go short, thinking below here. Changes me up as soon as we get above those little things that we're pointing at, saying it changes our narrative, and it just did that. So we dump this idea now and start to go over a new one. That's the wonderful thing about the 1 minute. You can see these sudden changes that support, ooh, wait a second, if this closes now and makes a fair value gap above this little consolidation here, I like that. Ideally, I'd like to see it get above here. And that fair value gap, zip into here, stop loss down here or here, and look for a run above those highs. And then you got to ask yourself, is that a high enough or a big enough stop loss? There you go. Bang, open, jump into it quick. Now leave town. Well, we had 21. We're down to 14 now. I can't believe how much we've shot up to 171 people already. I think we were just talking about like the 160s the other day. Oh, we're up to 171 people. That's awesome. Consolidation, tap that. My last trade for the day. I'm going off of here. I'm going to go long off that. We'll put a little stoppy lossy down here, right below that candle. I will do a one here as well. And I'll put the stop loss below here. I want to to see that stay open now. We have a fair value gap above a consolidation. That's a nice little entry for me. Now we'll see what we get above here. I love your cheerleading abs. Thanks, buddy. Appreciate it. Oh, we did pick up one more subscriber today. Well, whoever that is, welcome, welcome. Overlapping now. I want to see that really run up in here now. I don't want to see it just bang off of here and turn around and come back down again. That's good. That's what we're looking for. You're getting buffering. Yeah, it sucks when you get buffered like that. Are you also placing a trade or not? Who are you talking about? Me? I've already got a trade in. I got 2 trades in. We had 7 people watching. We're starting to leave now, and 7 people are watching. And we're not out of the woods yet. We're still consolidating. We're looking for... This was clean enough for me to take an entry because I like the fair value gap above the consolidation. I like that idea, so that's why I put 2 trades in there. But this could roll over and come back and beat me up anyway, because we're in this crap. So don't take the same trade I'm taking. I'm just, again, it's all demo. I'm just playing off of something that I like to see, and I'm trying to train my psychology to trust what I see, and if it doesn't work out, then it doesn't work out. I just like these fair value gaps that form above and then trade them when they come back in. A little piece staying open. I want to see this support off of here still. We got a body above it. We've closed above it. I'll find some support in here. I don't want to see this come ripping all the way back down into here again. This candle here, I want to see it provide a level of support at the mean threshold. And once again, I gotta go pee again. The joys of getting older. Drinking lots of coffee. I thought you were only doing paper trading, so I asked you. Oh, yeah, don't worry about my live trading stuff. This is only paper trading. You worry about your live trading, I'll worry about mine. I'm only going to do paper stuff. I cannot tell you guys what I do. If I'm in a live trade, I'll say I'm in a live trade, but I'm not going to tell you my exact entries, because you can bet they're probably pretty close to something that I'm doing on here. But worry about your live entries. I'm just going to show that all I'm here is to show you how to analyze the each candle as I see it. Where you guys put your entries in is entirely up to you. Placing a trade or not? I thought you were going to do the paper trade, so I asked you. I don't mean wrong about you. I just wanted to know. Oh yeah, no, I'm not offended. I just want to make sure that you guys aren't looking at this as a signal service. I want you to take every trade that I'm trading. Don't forget, I'm working. I'll tell you this again. I'm working on my own psychology. I come from a lot of bad trades. In the developmental part of my learning, and I'm trying to overcome that. So I may be working on a different personal development than you guys. You may be just working on entries and exits. I'm trying to work on a lot with my brain. I'm trying to overcome a lot of doubts and stuff, because I've given you guys multiple entries here, and I haven't taken them because I have a lot of doubt, a lot of fear. Even though I'm calling it candle by candle here, I'm slowly overcoming all that negative reinforcement I gave myself years and years ago. Now I just got to be kind. If I take a loss, I take a loss, and it's something I'm working on for myself. And reading candles is fun, but really I'm trying to undo some of the damage I did to myself with negative self-talk and all that other stuff in the past. So now I look for trying to find ways to be kind to the mind, right? So we bounced off this order block breaker up here. See that run, last up close candle before this little run below this low here. Well, that swing point, we've come all the way back up to it here. So the risk is of it coming all the way back down into here. I want to see this again provide a level of support. And now we've validated this candle here, so there's a little inversion starting here. We've closed below it already. We're getting beat up in a consolidation, so we have a consolidation here and a consolidation here. See, now I should have, as soon as that body closed below here and this traded back up into it right here, could have got out there, saved myself, make some profit, and save myself. My rule is if the body breaks below a consolidate, below my inversion, I should get out, pop back up, give you one more opportunity to get out before running down. So now I'm thinking, all I've got is this left down here before it takes my stop loss. And that's a breaker. So I'm hoping that provides a level of support now, and we just get another return back up into here. So there's the bounce off the bottom, mean threshold. How's that for ironic, hey? We're up $500, down $600. And I saw my rule break right there, but didn't do anything about it. See that? And we're calling that as it was happening. Came down and took me out. Gotta follow the rules, man. Gotta follow my rules. And I haven't taken a live trade for all week. I think Monday I took no, I haven't taken a trade this week yet. Last time I took a live trade was on Friday, I think. So this just reinforces the rule of if a body trades below the inversion, body trades below it, you're probably on the wrong side of it. Breaker didn't hold, so now we look up, does this provide a level of support on the backside to go short? And I'm not taking any more trades today. I'm surprised you like my style. My style's failed miserably this morning. So I hope you didn't follow me there for about. I hope you weren't jumping on that trade there. I should have followed my rule. And if whatever your rule is, whatever your trading plan is, that's the rule I didn't follow, broke my rule, and consequently I went from a profit to a loss. because I didn't follow my rule. So if you did follow me on that, I apologize. I feel bad for you. Again, consolidation. Wait for your clean setup. Follow your rules. Make your trading plan work. I just showed you a great example of what happens if you don't. Don't follow my rules. That's not yours. I don't know what your rules are, but that right there was my opportunity to get out on that wick. As soon as that happened, I was like, this could have got out right there. So we're through this breaker now. Finally gave up the ghost. Now you're looking for a deeper retracement. Oh, look at that one right there. See this? The one I erased. Look at that. Staying solid in it. I chopped it out because it was overlapping. Should have kept it in. Premium array, man. It's not a premium array anymore. Remove that. This guy is. Let's go there to there. See, when you're looking at this now, start looking at this and say, okay, so we're back to that 1 minute inversion again. We expect that it might provide a level of support, may or may not. But now we've got a little swing point happening here. Right as that candle closes, there's a swing. You can take your fib tool now, pull it from low to high and say, what in the premium arrays supports a run above 50%? Well, 50% puts us right in the middle of this breaker. Look at that. Mean threshold of the breaker. Right there, 50%. Just under the mean threshold. See that? We have an inversion right here. Just above 50%. So if we get those little wicks into it, look for a little run up into here. And if we're reaching for a higher array, what have we got? Right up in here, and that's right at 70%. As soon as I see that swing, pull your fib tool. If it changes, delete your fib tool and wait for the next swing, and then look for that again, premium and discount arrays, and what arrays overlap at your 50, 62% again. As you can see, it gets kind of challenging when we get into these consolidations, trying to trade out of them. You gotta be really nimble. I was not nimble enough to catch my, in my head fast enough to say, get out of it now. Order block. I want to see it get above this candle's low. If it doesn't, if it blasts through here now, I'll delete this. And we'll wait for another moment. So we got this order block mean threshold. I want to see it trade above this candle's low. If we're going long, that is. Right now we've just come back up to the body. We've dropped below it, come back up, hit the body. If we push through here now, we're going to push through here now. I don't think this is going to hold. Look at this breaker here. Run above those. See that? As soon as we drop below it, come back up, find some support at it. Now you want to go short. What's the reason I quit earlier? I quit earlier in this trade, you mean? Because when I saw this here and my stop loss was sitting here, I bailed out because I knew as soon as that body got broken, it wasn't until I got down here, I was like, no, we're getting, let me just see exactly where my execution was so I can be more precise. I don't want to kind of lead you down the garden path right here. Oh, I let it, it obviously took my stop loss. But again, if you're looking at these inversions, I'm gonna put these inversions up here. So again, sorry, this is where I did the wrong thing there. I was supposed to clone that. Again, this is my rule. This is not a Michael rule or anything like that. This is just my own personal. I got to make sure that this is. Let me make this a little bigger for you so you can see what it is I'm talking about. So you see that little inversion right there? That little inversion right there? And then there's this little inversion right here. As soon as this body closed below this inversion, closed below that inversion right there, I start going, we got overlapping inversions, right? When this one overlapped here and we start going, ugh, and it's closing, we go 1, 2, 3. It drove all the way through all three of those PD arrays on this candle, and we closed below that thing there. So remember what Michael says, if you trade in one candle through 3 PD arrays and you close on the third or below the third, your ass is next. So here's the opportunity for me to get out, because I was down here somewhere, so I would have had some profits. I was entered into right here. So this is where I was. All that would have been profitable. But because it closed below there, I was talking about it right as it was closing here. And I was like, see, it's closed below that already. And then all of a sudden it went woof, all the way down. And I thought, well, if it returns back up into here one more time, I can get out. But it came down and took out my stop loss right in here. So I didn't get a chance to get out. It took me out way down here at my stop loss. So that was the key there. So my rule is if it breaks below, you're probably wrong. If it trades back, and if you bought in, let's say I wanted to go long here, you go long 1, 2, 3 entry places right here. So you go 1, 2, 3, they all enter, and then it closes below, and you go, ooh, crap. I'm wrong. It's closed below me here. If it trades back up into it, I'm going to get out. So 1, 2, 3, you could get them all out there and move to the sidelines and wait for a better setup. Again, you're in a consolidation. Not a great place to try and put trades anyway. But anyway, that's the logic behind the rule that I like to follow. which obviously in this case I did not. So do as I say, not as I do, so to speak. Hopefully that's clear to you there, Furba. A lot of chop chop going on here. Yes, everyone should have their own trading style. I tend to use Model 5 as my holy grail, and even then it still fails. Very awesome technique, thank you. Again, there's times where it's just popped below. It might be just, if that was the inversion, if it just does a little tiny pop below, I get out, and then it turns around and goes right back up again. But again, the rule is if a body trades below it, you get out. In this case, see how it would have suckered me in. It would have gone, oof, came down, took me out, and then would have closed right there, opened on that. You go, oh, was it just the wick doing the damage? Is this going to return now? Hell no. It just drove straight through you. So when you see something like this and it comes back and closes, you say, good. If it breaks the 50% of that, I'm out. Before it hits my stop loss, I'm out. Because that wick now should be a level of support. And if it starts to blow through it, then ideally you should see weakness at 25% of that and start running back up. But if it starts to eat through it like this, you could have bailed out a little less. But there, that's all hindsight thinking right now. So we have now we're below the, we're closing right on the 1 minute. See how the body, I love the way these bodies are respecting it, wicks touching it. We start trading through it, get to the bottom, come back into a mean threshold. That's an area sensitivity. We have a little fair value gap sitting right here inside the 1 minute. We have an order block back here, this up close candle. Lows, come back inside there, tag the bottom of this one. Ideally you want to see it come back into the midpoint of this right here, or the body, which is the mean threshold of this. Consequent encroachment, you know what I mean. Area sensitivity, mean threshold, consequent encroachment, closes on it. Look at that. And that was from way back here. That guy. At 8:30 this morning. And it's still providing a level of support at its consequent encroachment. And it's all through, chopping all through that stuff. So we cut through candles. Okie dokie. Do you see what's happening here now? What do you guys see here? What do you see in this box right here? If you're analyzing candle by candle, day by day, minute by minute, whatever, if this was a daily candles, what would you see? It's minute now, so tell me, what do you see here that you're looking for support, resistance? Tell me the time you're looking at. What minute candle are you looking at for support, resistance? Okay, abs. Okay, nobody's participating. That's okay. Right here. Breaker. Fair value gap. That runs back up into that. Short. Back to consolidation. Old highs. Little candle down here. I'm going to take this guy here. This guy here, you gotta build. Body closes below it, transfer, trades back up into it. Tap, tap. Midpoint, came back through, drove all the way through it, come back up, midpoint, mean threshold, tap, mean, look for a turn to here, there, react off that. Body, other candle here, we got a small one inversion there. There's so many on the other side here too. So back up to that order block there. Are we getting some lift off this guy? We need to lose the mean threshold of that candle. If that is a support level, we need to lose that. Oh, look at that. Open, closed on, just below it. There you go. Now we want to start seeing some interesting stuff happening. We're not excited about a long call here. This could still be a short. We're looking at this order block here now. Range, premium. discount. Premium discount. See that? It's not always just in this little run that you see. Look back here, that supports a bounce off there, a run back up into a little imbalance sitting right here, mean threshold, bouncing right off the bottom of that premium array. If I pull my fib tool, you'll find that that is the oops, crap, breaker. Let me lock that in so I don't mess around with it. Lock it in. Let's do the fib tool again from there to there. Optimum trade entry, inside a premium array, inside an order block, roll over, come back down to where? Then you pull the fib tool from here to here, look at a discount array. We still have that little guy up there yet. Can still run up here. Paper trade that. I'm pretending I'm putting a trade in here with paper, with my pen. I'm not even actually doing a paper trade. In the demo account, I'm paper trading it. Right there. No live account, no nothing. Just looking at that imbalance, looking at that mean threshold, thinking, have I picked a high? And we know what we say about trying to pick highs, people. Now from there, if I was paper pen trading, I'd come back to a discount array and I would take my shekels, 18, there's 20 shekels right there, 20 handles, back to here. Doji, do you like your dojis, retail people? How do you like your dojis? 1 minute fair value gap providing support, or was providing support. See how it's closed right on that little inversion there. Also the 1 minute fair value gap. Also that little tiny price imbalance. So my paper trade. I'm gonna see if I get 18 handles out of a paper trade to a discount array here. I tell you, when these markets start to smoothen out, if we're close on these 1 minutes, I love this because this is 1 minute's really giving us some challenges. Or really giving me some challenges anyway. To stay focused and try and catch every candle. It's been fun. It's been a real challenge. And trying to catch little trades and stuff. Or at least read price action before your brain starts to fry and I gotta take my eyes off the charts. But imagine what's gonna happen once this smooths out and we get some decent runs. Ooh. Ooh, Nelly. We're gonna have a lot of fun. That is not a discount array. Let me make this a little bigger. This would be a new price leg up if this is takes up my high here. 50% puts us right on the money. So we pencil or paper traded that at 17,718. We don't want to get a body above here now. We don't want that high. My stop loss would be right there on that high, because I don't want to see that take out anything there. And that's the high I want for my fib. So if it takes my high out, I'm out. So it's almost right by my entry. So I'm literally one handle stop loss. Body closed above it right there, out. Close out right there. So I'm up 3 handles. See how the body broke above it? Rule, get out. Now here we'll find out whether or not that rule applies. If this turns around and shoots back up again, that's why the rule right there supports price. Even though I could be making more money right there, it's okay. That's my rule, my paper rule. 3 handles, you're out. Consolidation anyway. We'll find out whether or not that rule right there, which is what I was talking about up there, there's the rule. We traded above it. We didn't want that. Now if it trades back in, if you were getting short in here somewhere and it trades back to you, or you're getting long there, it trades back to you. No, short. You would get out there, or get out down here. I don't know what. I'm sorry, my brain's frying out. So I traded above our SIBI here. Rule, get out. And here's where my rule so far is failing me. I had the stop loss there. As soon as I stop break that's the rule, get out. Doesn't matter if it goes down now, don't beat myself up. There was an extra 8 handles in there so far, but that's okay. That right there. If it hammers down from here, I got to allow for a return to, no. Got to keep the rule. 50% fill. Now if you hit here, that would have been the objective right there. Bang. Okay. So there's an example of a little tiny body goes above it, breaks the rule, get out, and you go, well, you made 3 handles off of it, but you would have made 20 handles off of it had you come, but that's okay. I have to recheck this. If it's close to my rule here, Stop loss stays there. I don't know. I'm trying to convince myself to have stayed in that. Trying to find a way to violate my rule now. What do you guys think about that? In hindsight, it's easy to say, oh, bad choice. But had that stopped and gone back up, you would have been like, hey, good choice, man. That's a really good rule. Right? So you got to try and find a reason to validate. Yeah. That's the place we came back to. Now I'm looking at this going, wow, that would have been such a perfect little entry. Well. Consolidations. That's a great place to exit a big chunk of money. If you're from there to there. That was 30 handles almost. Well, 32 handles. No, 28 handles. Well, we're into lunch hour now. Are we taking out the lows that occurred around 10 o'clock for lunch? Lots of liquidity down here, so this would be ideally a place to aim for the lunch hour. 1 o'clock, take out the lows, come back into that range again. Okay, good. So when you look at those premium and discounts all the time, you say, what premium array is sitting up in here that would give us good price? Right there. Ooh, what was sitting right in there? Beautiful little inside that order block. So if you're returning to this order block here, there's a little tiny piece of imbalance that Michael loves to get in on right there and say, well, you know, overall I'm looking for a short back into this old high here. So we got short, but then I talked myself out of it right there. My rule took me out. Three handles versus 30 handles. So you look for this to provide support, this one here to provide support. Fair value gap. See, there's so many of them overlapping now. This one, that one way up there still, order block. This one here. Which one do you really? Fair value gap fill. premium discount. We got this up here, this inversion here. There's the edge of that one. Old low. Order block. Go on, tippy tappy it. There you go. Tap. Now you can roll over and come back down. Or is there a little, oh, sorry, there's a little tiny one here. You see the high on this one is 710. The low on this one is 717. There's the mean threshold. Does that hold price? Interesting. We've gone. See where this closes in the next 1 second. Ooh, right on it. See that? Ran the lows. Wicking the highs. Ah, nice. Okay, so now we're getting now a nice little run above. This would be nice. Nice, nice, nice. If we're going long now, again, we've got to change your narrative when you see something as a break in structure, right? This body here really gives me a bold candle up to the breaker. Let me move this one over here a bit more. Unlock the breaker. Move it over. Lock the breaker. So we could get a return to this breaker one more time and start digging down even further. But now we've got a body above these highs. And this inversion, again, once again providing a level of support. Do we start to get through this breaker? Or are we just coming into it just to go back down below it and looking for all these nice little discount arrays sitting inside this new range we're creating here? This is good. If we get this breaker inside a fair value gap, we have a fair value gap happening above this high. I like it. I like it for a long. And I want that breaker to hold. I'll even put the stop loss right below the breaker, not even in here. This should stay open. I'll even put a buy right there. And my stop loss will go right below the breaker. See, we've hit that breaker above. This is where I could get beat up here. Hit that, turn around, and come back all the way back down here. I'm looking at this breaker. We're between this guy and this guy now. If we kick off that, come back here. I want to see that one give way. If it doesn't, then I'm on the wrong side of it and we start coming back down into a deeper range. But I want to see this stay open. So my idea is that this breaker provide a level of support. You can even come into this right here. You can even fill that one up, but you don't want to go down below there. You can even tap the bottom of that. I'm all right with that too. Hitting it. See that body's respecting it. Now pop back. Tag me in. And let's go for a walk. Now, not a discount by any stretch. Okay, now we're back into the breaker. That's the fair value gap entry. Breaker, right there. Bingo. There's the close. Mean threshold. Now please leave. If it takes me out, then that breaker, when then we're looking for a discount array in here. We're getting back into a consolidation and that breaker held. I'm hoping the competition between these two breakers, this being the fresh one, that one already been hit a bunch of times. I'm kind of hoping that that gives way. I'll find out if that order block holds. So we had a slight tap down in there. Those are all the things I allow it to do. Now I want to see it eat through here. I can even use that one more time as a step. But I want to see that go. Got to eat through this mean threshold here. You can allow it to come back and tag it one more time. I do not want this low getting taken out now. Oops. I don't want the low getting taken out. So that's my line in the sand there now. That's where I was allowing it to come down to. Inside the breaker. You can tap that breaker again and that old 1 minute high, but I don't want it to break that low. So I don't want to see, this breaker's been hit. I don't want to keep seeing it get hit over and over again now. If I want something stronger, I want to see a lift off here. Otherwise we're stuck between this guy here and the breaker. And if that guy doesn't let go of price, I'm bashing around between these two. That guy, he needs to let go, and that guy needs to give me some support on top of my 1 minute. So there's my logic of making sure this holds now. And I've really pulled my stop loss super tight. I'm discounting all this down here, and I'm saying that there should be providing me support. If it doesn't, okay, I'm wrong. And I'm building my trade is building up a support resistance type of idea. If I lose this, and I know my stop loss is sucked up really tight, people might say your stop loss is way too tight. I'm not worried about the tightness of it. I'm worried about the application of the stop loss. Why am I putting it here? Here's my rationale. I've seen this, I want that, and now after each candle, I want to see this go. If this is not going, then I don't want to see it come back and revisit this, because we've got our thing. It's taken its allowed run, a nice run into the mean threshold of that candle. If we lose the mean threshold, then I'm wrong, right? So if it retaps this again, we're eating into that mean threshold a second time. So I don't want that, and I'm willing to take $135. Paper trade loss. And the fact that now it's bipping around here sideways, and we're in lunch hour, not a fun place to be. You want to see this really start getting some legs, but in the middle of lunch hour, maybe not going to happen. Tends to mark time more, right? So we've got lots of liquidity sitting up here still, but we also have that stuff way down low there. I'll be out long before it gets down there if I'm wrong. So we still got two hurdles. I've got to get through this. These equal highs, it may just take the equals highs and roll over and come back down. Again, not really that mean threshold, not giving it up. The breaker got a lot of stink on that breaker. Price is smelling it and getting away from it. Where's my carrot? Where's my damn carrot? I give that thing a little something more tasty to sniff. Oh, that's funny. As soon as you put it out there, you guys are going to be putting carrots on your charts now going, there's something about that damn carrot. So now we've took this high. That should be a few handles for you right there. 17, 26. There's 10 handles right there. I want to see that breaker give way now. We're banging into the body of it. See right here? Now I do not want to see. We've revisited this a couple of times here now. You see this? Old high. We've come into the breaker nice and deep. Wick does the damage. Then the body comes, it taps the breaker one more time, and then we're starting to leave. So now I do not want to see it come below tapping the breaker one more time. So now, right there. And if it comes all the way back down again and I'm wrong, and then it takes off from there, I don't care. I've seen the breaker get hit. Valid. Come back, tag it one more time. I said it could tag it one more time and then go. Well, there's the tag one more time. And it goes. So now I want to see these order blocks hold and this mean threshold hold. If not, it'll come back and take me out. And I'm all right with a $40 loss now. So there's the order block. You want to see it provide support. This is the little, I want to see the steps start climbing on this thing now, right? Start building some support off these order blocks inside a bigger one, which is a mean threshold. So we get a bit of kick off of it. So you got to get back up through that candle's mean threshold. Again, start digging into that breaker. This is crappy when it's in consolidation, but I'm trying to show you guys reading each candle and why I'm going to start working it from the back end here. And if I'm wrong, I don't want to see that mean threshold get lost. Look at that. See the body respecting it? I want to see that give way, not just bounce off of it and come back in, because now we're between this guy and this guy. So I guess if I'm going to try and chase this candle by candle now. I don't care if I lose it. I'm going to chase this candle by candle. Say I don't want to see this one lose now. Are they going to run me out? Well, I made 40 bucks. So there's the mean threshold loss. So once it loses that, then I start to go, all right, now how much further are we going to dig down into here now? So we'll see if this now, because that, and this is important to see here now. Now we've seen this candle get blown through, and the mean threshold is getting blown through. See how we close below it? I didn't want it to go below there, so my stop loss was there, a little bit of profit. So if it comes back up, now it's finding support at this and start running through. So even that one little thing, I said, I don't want to see that. Otherwise, we've got more downside, right? That's why you kind of chase it up and make sure you find the valid rule over and over again. Now you may say to yourself, all right, what are you willing to come back to inside here? Well, that's not an order block for me to come back to. This sucker is inside this whole range, high to low, and you look for the candles that are down candles below you and bull candles that are above you to find breaker to breaker, if you could do that. But that whole candle is sitting inside that whole range. So we're back to this old high again, in a consolidation, move to the sidelines and wait, because now you've got breaker to breaker bouncing. So we're kind of hoping that this would still find some momentum to go back up. It didn't. We didn't give it a chance to do this, peter off. We kind of chased it and said, that's our support candle. If I lose my support candle, I'm out. And that for me is a good psychological builder for me, because now I'm saying you're chasing logical. You allowed it to come back to a logical thing. We said we'd allow it to just pop below here, and it did. Good. So then now that becomes my anchor point, the mean threshold. And each candle, hopefully you understood why I was looking for each specific spot and why I wanted them to provide support. And you saw me inching that up, because I'm looking for levels of support on my trade plan for higher prices. And if I don't get it, then I'm gonna cut back on my losses now. And in this case, we actually made enough to pay for the trade. So, and in this case, it worked perfect, because now we're definitely taking we're taking a big loss. Had we left it just sitting there waiting, we're watching candle by candle now, and we made a profit out of that versus a definite loss we would have taken down here by managing the back end. That was back end trading, not objective trading. So now that candle, we lose it. We break on the downside, break it on the downside right there, come back into, find support. Candle, break it, downside, come back up, find support. So those are all candles that support a downside run now with the order block. Abs, you're back. You know I can't feed Carrot because I don't have paid version of TradingView. I'm on MT5, so it's a little bit harder to make those levels. Yes. How come you didn't wait for it to come back to a discount on the little price leg? On the little price leg? This one here, you mean? Because there is no discount. This order block, so remember I said there's a down close candles? The only down close candle I've broken above is this guy here. We broke above that one, so the midpoint would be your, because it's the candle with the lowest body. So if you're looking for that small range, that candle is the candle that takes up premium and discount, and its mean threshold is probably close to the mean threshold of that whole equilibrium of that whole range. So yeah, you can't even use that candle. You got to use these little guys here to, are they providing me a level of support? So that small price leg didn't even have a discount array, unless you're looking at a rejection, and that was too far down for me to play with, because now that invalidates these as stepping stones for higher prices, and I wanted to use these as stepping stones. And as soon as they gave way, and as soon as that order block there gives way, comes back, finds support at suspicion number one. Suspicion number one, we validated a bull candle. It's run above highs. There's a bull candle. We validated it here. Wait, what happens here?
We have a body break below that candle. That's not a good sign. And it's right back to a candle I want to find support on. So that's why I was saying I want to see it get through here now. It came back up, tagged it, came back down, and then you go, nope, get out. Because now the reverse has happened. And that's why you look at each candle and say, when did they get validated? And when did they get validated with a wick or a body? Bodies are more scary than wicks. If it was just wick through it, then it's just wicking back to get a PD array and then continue pushing through it. I like those. But bodies, no. That's where you start saying, well, I've got PD arrays that are overlapping now. I want this to be my support. It's come down and tagged my support, but it's also validated that one for an opposite direction. So you've got to keep open-minded, not buy into that it's going to go long all the time. There's a chance that this could be reversing. So come back, it validates it, and then pulls away. And as soon as it does this, you go, uh-oh. It's not going to find support off of that. That's now finding support. So I'm between these two. So you'll see me do this a lot where you go, now we're between these two candles, that one and that one. Well, if that's my support, then I got to put my stop loss really tight. I don't want the mean threshold to go, because if it does, then you're out. Now we've lost this candle, and you did. Boom, right there. I know it's hard when you're looking at each individual candle. I know a lot of people prefer to just trade a range or trade a higher objective or something like that. I'm just trying to show you how I look at each individual candle, each PD array, when it starts to turn. It takes a lot of mental focus to see this. As you can see, I slipped up a couple of times today, and you got to be really focused at 1 minute candles. You might want to just go on an hourly candle and say, I saw that back to here. Nope. If I find support off that when I come back after lunch, if that candle's still sitting here, validated that, sitting on there, I'm out. So now we've got this huge run back down. So as soon as you take that low out with a body right there, see that? That body takes that low, we have a break in structure. See that swing point there? Body takes the candle out. Let's see, we've got wicks in this one, but they have a body take that out, break in structure. Body takes that one out, break in structure. Imbalance, trade back to the imbalance, short. Because inside here, it's just above the 50% of that big range there. See that? We traded below into a discount, ran right back up into premium again, right into that little bit of a range, and then said, that's all I need to do is just get back into that little premium portion of this range here one more time, unload my long positions right here, and go short. So all those who are going long, they carry them down, unload them back here, they'll go short. Right at 50% imbalance level. So look at this guy here now. Let me get rid of all this crap here now. We'll build those as they happen. And look at that mean, it also come back into the mean threshold of that 1 minute candle again. Look at that. And that's from way back over there at 8:30 this morning. It's still hitting a PD array inside that 1 minute inversion. Do we cut through candles? Hells yeah. Do these levels provide support? Hell yeah. Do they provide support in the context of a reversal? Yep. And it's not all hindsight jibber jabber too. This is, as we're talking about it, the way as it's happening, we're looking, trying to validate each candle and the language I'm trying to give you to support where I think price is going to turn. So if you see me flipping, flopping back and forth, well, that's because we're in consolidations and we've changed up. We've gone from long to short. You got to be nimble enough to see that. And hopefully you learned some of that today, or saw some of that. I don't want to imply that I'm teaching something. I just want to be, hopefully I'm just kind of pointing out some of the things you guys are already aware of on the higher time frames. We have no carrot there anymore. Where is our carrot going? Oh yeah, that was the original leg we're looking for, wasn't it, down here? So you have to take this from here then. Well, about the same level. Ooh, I do like that one then. If we get another little pump straight back up into this, look for that order block low, this fair value gap fill, premium discount. Is that near 50%? Where would that put us at 50%? This is where you take your fib tool and use it as a possible extension. Right there. 50% brings us right back into here. And if this is the low, where does that put us? Right on the body, right in there. We'll see what happens here. Look right here. Breaker now, right? The new breaker. We'll just say return to the breaker. Just came to the bottom of that inversion there. Oops. Didn't lock it down. How come you did not really come back to the price of discount and a little price like? Did that make sense, Abs, when I explained that? Hopefully I explained it clearly enough to you. Derek, interesting that lunch seems to be wanting to head bearish on the indices. Shall it continue in the PM or reverse? Yes. I'm wondering what happens once we have this price leg completed. Let me just have a look on some other time frames here. What's going on? 15-minute puts us right back into mean threshold. Order block high. On the 15-minute, 1 hour. Brings us back into, oof, rejection block again. So maybe we won't get any lower. If this is the swing that occurred on the hourly, This is interesting right here. We could have run potentially all the way back up into here, inversion. So let's just see this on the hourly here. Let me show you what I'm looking at here. So hourly, we have this from here to here as a fair value gap. We've come back, filled it, closed below it. So if we come back up, find some support here and continue down, this could be the next leg down. Do you see that? Let me get rid of all this stuff in here now. Let's just put the hourly in here. Now it becomes an inversion. See that? We traded all the way through it. And what would we do here? We trade back up to it, find support, wick. Wick would be here, and then continue down. Right? So if we get a nice little retracement after lunch back into here, don't forget we got the mean threshold. We have all that stuff we can come back into. We can even trade all the way back up to the top and then roll over and come back down. So we'll see if this inversion on the hourly holds price here, or we start to dig into the mean threshold. Consequent encroachment. You know, I call it everything a mean threshold. The CE, midpoint. So tap it and go. That's what it feels like it would do, hey? Is that what you guys get out of that? Like we've got a nice little bearish run all day, that this would be a tap on that and a rollover and a continuation down into the daily price imbalance again. It'd be a great opportunity to get short right there, but you better have a stop loss that sits above that. So you're looking in here now for reasons to find support, either here or here or here, to find support for further downside for the rest of the day. Because if it's not, if we're reversing, if this is the low of the week, if Tuesday has created the low of the week right here, this is, we'll place the other end of the scenario here, the other side of the coin. If we start to see, if we don't see this low hold price, now this is how I kind of look at it in terms of strength. Strong, medium, weak for a short. I get weaker and weaker the higher I get in this inversion. Stronger if I get a bounce off of it and start trading it back below the open of this hourly candle here. If I trade back below that, then I start getting a little more excited about it. Inside this candle right now, we're at 1104. So if you look up there, find a little support off of that, turns around and it becomes a silver bullet entry for a short, then I'd start going lower. Keep your stop loss tight. We can do the whole managing in the 1 minute chart again and make sure it supports our narrative for downward prices. But if it runs back up into here, it's a medium strength, and then it's a lot weaker. Now, the opposite side of the coin is if we trade all the way back up here today, and if just suddenly with this next hour it opens up and just starts charging up, and we get a body close above this candle's high, and then we trade back into it, find support at this, we may be looking for this becoming the new inversion on the upside for more upside prices. And then we'd have to look for half that wick being gone and all that other stuff. But right now, definitely bearish, looking for this inversion to hold price, running lower. So Tuesday low of the week, if it is, we want to see this start to give way. If it's not, if this is Tuesday's high of the week, started up here, no, was this Monday's high of the week, Tuesday, Wednesday, Thursday reversal. So we got Wednesday another run down, and Thursday with a bit of a pump back up again into some more of this. If not, we have the seasonal tendency. Don't forget the seasonal tendency. I sold off everything out of my ETFs yesterday because I'm anticipating a February into March retracement. So this would be a nice continuation on the downside overall, what I'd like to see, just from my own stock perspective, so I can buy it back cheaper. Does that make sense to you guys? So the hourly is right there. So we're looking for a bounce up off of that. Can even hit that breaker one more time, roll over and come back down. Jack Shackelford, there's a new guy. Welcome, Jack. You heading off to school? Or heading off to work? Heading off to class. Okay, man. Well, thank you for popping in, Jack. Thanks for, it's always a pleasure to have new people popping in. Welcome, welcome. Michael, ES. In option trade entry. Michael, we have a new Michael as well. Michael. Everybody loves your name. There's something about your name everybody just likes, Michael. In ES, we're in optimum trade entry, you said? OTE. OTE. Right inside here, optimum trade entry. Look at that. We've got order block going above, come back in, find some support, come back up, find some support, and then we kind of blow through the order block, mean threshold here on the 15-minute, come back up, find support at this order block here, break down. We're now inside this range here. Optimum trade entry, yes, we're inside that fair value gap on the 15-minute time frame. Now your question is, does it hold support here? And is this a consolidation you want to stay in? Or do we want to break through this? Look for that inversion now on the 15-minute. You want to see this give way. Break down, come back up, find support at it, then say, yeah, baby, we're still going down. We're in the PM session. Breaker. Look for your breaker right here on the 1 minute. Draw it across. Come back into that breaker. Small range. That would be a nice little return into here and drop back down. So keep your eyes on that guy right there. And that little fair value gap right there. Lots of little inversions that you should have marked out on your chart. How they provide support. There's our run back to our 1 hour. Just hit it. Now how it acts here inside this little inversion now. Let me get this out of the way here. We want to see it pop off this and start either coming out perfectly here or allowing it to come back into that breaker, which would be swing point. See swing point there, 50% puts us right on a fill of that. I like the kick off there now. That's a good kick. Now we've got this valid order block here. See that? It suddenly validated this one. There's a little imbalance down here. I like that. Now you want to see this body close below that, kind of like what we were talking about back up here, right? Same kind of thing now. There's a body. Good. Come back. Find support at it. Now you want to see that just start That was the idea we're looking for. Return back into that on the hourly. It's hit it right on the money. Got an order block forming. Great. We've come back. We've tagged it right there. Now you want to see it go down. Not that we were going to pick the high, but now you want to see this trend line get broken. The trendies are doing this, making their little troughs. You want to see them get busted right here. Mean threshold, you want to see that hold? Again, we're allowing it to come back up to here. Bragging rights as if we hit it here, right on the money. We're bragging to our friends about how perfect we were. But we allow it to come back up in here. This is just precision. So we want to see that mean threshold. Hold price. Now start blowing below this guy here. Otherwise, that's our last guy. We don't want to see it break that high. So right now, can you see where we're at? We're right here, kind of saying, did we hit the precision? And that mean threshold is holding price for us now. We want to see this candle give way at the bottom. Or bottom, as we say in England. We're going to see the mean threshold of, oh no, that one counts the down candle. Going in. Lovely. Chovely lovely. Now I want to see a body get below it. Don't give me no wick. Don't talk no wick jab. Give me some body action. Yeah. Consolidate. We do have a wick below it, but I want to see a body get below it. Give me some more strength in this order block. Are we going to tap this low one more time? I don't want to see this give. Okay. Rejection. See where it closes. Oh, where are we? Optim Trader. I still have eyes on NQ 17,550. 17,550. Oh, down low. Yes. TK will do the PM session too. Kirk, is there a 50-minute order block generated? The silver bullet that may act as support. A 15-minute. This guy right here. As a silver bullet for a long, you mean? Well, we're hoping that this bangs off of here and starts rocketing back down on the hourly now, right? That's the inversion that we're looking for. Again, we said we lose strength if it comes to the middle, and it really loses its luster when we get to the high. So 15-minute, is that an inversion? Absolutely, it's an inversion. If we get below it and come back to it, find support, get short, yeah. If we get on top of it, find support, and then keep pushing higher, then yeah. But right now, it's just a fair value gap that's getting beat up in the inside. There's the breaker. Mean threshold. You don't want to lose that. All right, so we got two narratives. One is for lower prices. The other one is, we talked about the three levels inside the hourly. So hourly is here. The bottom loses, it's milder here. It loses its luster if it gets all the way back up there. You can still make it down, but again, not as strong as we had hoped if it was bouncing off of here or here. And really loses its luster for me, short term, if this breaker now gets taken out. So Kirk's looking for this 15-minute fair value gap. It becomes support when we get on top of it here. Wherever that wick ends, we get on top of it, look for upside prices. So right now we're back to this order block. So we ran all the way back up inside here to order block, right on the money. Now, does this provide a level of support to optimum trade entry for a short? Or we have a little consolidation here. We've got a fair value gap above. Do we come back to the old highs, tag them, and then continue to the upside? Again, if we're building narratives on both sides of the fence, what do you want to do? Are you in or are you out? Are you long or are you short? Are you gambling on a long, or are you gonna continuation on the short? Right now we're looking for it's showing us long just on a pure 1 minute. Now if we lose the support here, we're back to the short idea again. Retracement was just back into this order block. The breaker, it traded all the way into the breaker, popped above the high of the breaker, closed above the high of the breaker, so not really strong. So we'll see if we lose the midpoint of this candle. And we've got this down close candle here as well. Its midpoint has already been hit multiple times. The fact that that's sitting there like that and not popping off of it gives me a feeling that we could still keep coming down. There's the midpoint. Area sensitivity. Now come back, find support at this, and then roll over and come back down. Inversion. See that? Right there. Bottom of the hourly again. Inversion. Bottom of the order block. You want to see that give way if you want to go up higher. You don't want this one to give way. You want to see that hold right there on the body for a short. Now you want to see this candle give way for a short if you're still going short. If you're going long, you don't want this candle to give way. So you're between these two candles right now and inside this inversion. So where it closes, see we closed a little bit above and we closed below. So which direction do you want to go? Again, if you can argue both sides, wait till you get something cleaner. I kind of like that 1 hour fair providing 1 hour fair value gap, providing it an inversion here since it failed miserably earlier this morning. It'd be nice if it could find some support here. So watch carefully now when you guys start to notice if it gives way on a narrative above or a narrative below. Which one supports your idea? For example, here would support my idea for a short. Eat through here, provide support here in this inversion. It's a premium array discount. You got to start blowing through all this. See how that trend line, the trendies are all getting about to get beat up. So if you're drawing your line in there, coming through, come back up, find some support at that breaker here. Now we've got a wick. Yeah, you want to see this guy here now. for a short. I like that providing support now. Another one's going to go in right there if it comes back up into a premium level. I'm buying it at a very big discount right here. I'm buying it off the breaker, so I'm paying a discount price to hopefully a smaller price, selling it at an even lesser price down here instead of waiting for a return up into this hourly one more time. There's a little tiny imbalance sitting right there, so I'll put one more there, stop loss above that if it comes to here. I want this mean threshold to hold now. Now that we've broken this low, not with a body, more of a wick, not a good idea. Should wait for a body. I'll make that clear now before I take another loss. This should be a body breaking this low, and it's not, it's a wick. We've been beat up here before. Inversion. Not following the rule. Body should be breaking this, not a wick. Come all the way back into this order block? No. There's the top of the inversion. I want to see it get below here now. I don't want to see a fair value gap forming in here. Good. Want to see a body close below that? Ugh. That's not what I want to see as a wick. Crap. That's going to run up and take me out. Getting out of there before it hits me. As soon as that wick started happening, I was like, yeah, that screwed me. Came back into this inversion here. Found support off of it. Consolidations again. Trying to find an inversion to get your support off of inside a consolidation. Did not have a body break below their low. Here's all the how you lose not following the damn rules today. Not following the damn rules. Yeah, I'm doing a long session today. Oh, it's 11:30. Man, I haven't even had breakfast yet. I have an appointment soon, too. Oh, what time's my appointment? Crap. I thought I had an appointment today. Stand by. One p.m. Okay. If this takes me out, if this drives down here now and finally heads out, look at the mean threshold here. Stop loss management again. We're consolidating, so that's what it's like trying to trade out of a consolidation. Got to get a body. Got to get a body break below the low, not just a wick. This is the kind of shit that can happen inside there. Back inside that range. Back to this thing. So you're really between here and here right now. See how we've ran all the way up to that array and this array, and then we went here. As soon as we hit inside that array, we rolled back down and just tagged the top of this one. Also the fair value gap that we just went through, popped on it, come back up inside this order block. Now you've got to dig down deeper. That thing's not worth anything anymore. Now it's going to continue down. Stop loss should be in here. Okay, boys, that's it. My mind's fried. These 5 minutes are crucial to me. See whether we're going lower or higher. Mike Tyson. Yeah, it's getting beat up in here. You're on fire this morning. Yeah, I'm burning up. I'm not on fire in a good way. I'm burning up, my friends. I ran into the fire with no bunker gear. So look for that candle there to find some support. Mean threshold. that blows through the mean threshold again. Look for the mean threshold of that candle yet to be touched. So this consolidation, discount array. Bodies are still respecting this inversion here. Oh no, you actually traded below that one. So mean threshold. And then you're between these two then. That guy and that guy. We have an inversion down here. That guy kicked right off the bottom of it. Run back up to here. So this is getting smaller and smaller now. It's going to have to start expanding higher or lower. I just want to see something here. I'm trying to invent something new here. I'll share this idea with you guys later if this continues. I'm going to do some research on this right here, what I just did for this right here. I'll give you a preamble of, I'll show you what it is right here, and then you guys figure out what it is I just did to get this. What was my anchor point? Because I'm curious to see if this works every time. I have to back check that. I'm going to back test that one now. And if it's right, if I can see it in a multiple back test, I'll throw it to you guys. You can back test it and see if you're right. See if it's right. And it's not nothing Michael's ever taught us. It's not an ICT concept. I just saw something. I was like, ooh, I wonder. I wonder. Remember a fish called Wanda when he's trying to say to his wife, I wonder. Sorry, my mind's off on another movie. So, inversion, does it support? The body again has to get below. I can go for the extended time this morning, Darren. Have a great afternoon. Thanks. May as well stay for the PM Silver Bullet session now, D. Where are we at here? 11:30 p.m. is 12. That would be 2 o'clock, right? All right. I may stick around for another half hour or so. I've had no eggs this morning, Derek. I'm running on coffee only. Coffee and carrots, man. Digital carrots. That's not enough nutrition for my little brain. I'm 58 years old. My brain's starting to fry out. Are you trying to slap me and wake me up? Is that what those things are? Or is that clapping? Wake up. Stay in the game. You had yours at 8:30. Oh, man. I had a nice little bacon egg butty yesterday. Ooh, I like a nice bacon egg butty, I do. So keep your eye on this candle and that inversion, this inversion. Premium discount, blah, blah. Inside this range, where's the premium piece? Up in here. Discount piece. That's the edge of the premium, maybe. Let's have a look. Let's sex it up a little bit here, make it a little bigger. Yep, there's the premium right there. So there's a 50%. Literally in the middle of that candle is your premium and discount array. See how we're banging in there? So watch it run up into here. In the premiums, also inside this order block. See how they're kind of overlapping now? We're below this candle, so mean threshold. Get below that one, good. Get a body below that one. Get excited when you start to see a body get below these candles. You go, oh no, that's a nice little order block I can key off of. Wicks are no good. Yeah, that's what you want to see. Get some body down there. Woo! Now stay there. Stay there. This is going to be another range I called but never stayed in because of poor management of my stop loss. There you go. Now you look at that and you say, now that candle's a good valid candle to get some support off of. Now you have a bold candle down. See, right there. Bink. Off of it here. Run into the bodies. Nah, snap. Like a snap back like a rubber band. No, you don't want to see them. Oh, you don't want to see that. You don't want to see that. You don't want to see a close out of that. Oh, okay, it's back into that guy. Imbalance. Small little fair value, yeah. Imbalance. Okay, I got it. That's it. We're not looking at this thing. We're looking at all these things inside here. These overlapping arrays here. Now we got to get some extension. Get out of this mess here now. Now I want to see something like this provide some level of support. It says, screw you, Darren. You're not getting nothing. Premium discount. What do we got here? We're really between this guy here and shortly this guy here. Yep. We're between these two right now. That guy, that guy. Now you don't want to see the mean threshold here go. And you want to see this one start to eat through here now. If this downward trend continues. And if it doesn't, You gotta see it blast through here now. That mean threshold's holding. Hit off that hourly fair value gap again. The mean threshold of this candle's got to go now. Coming up for lunchtime. Still have them in my pajamas. Still rocking the PJs in the morning. There we go. That's what we're looking for. Close below that. Holy waffling, Batman. This is the high resistance crap you don't want to be in. So now you got a wick below this candle. So you want to see if this provides some support. If not, rejection again back into here. So you want to see this provide some support. And that mean threshold, you're pretty much overlapping these two right now. So you want to see this give way. We've already wicked. We're up and wicking into this one already. Premium discount, that's not even in the, that's barely even in the premium anymore, is it? Yeah, it's just in the premium. So you want to see this really start to drop through this now and start reaching for here. Something tells me I shouldn't be. Are you in a trade right now? Derek, are you in a trade? Man, you're going around with Tyson today. I have to believe we're headed to a 2% drop in the indices at the end of the day. That the CPI data was a crusher. I agree with you. I did agree with you. We're going down. It's just how much you want to trail your stop loss behind this mess that we call a consolidation. If you hold your stop loss up above the mean threshold of that'd be awesome. If this held price here, that high holds price. But that's just, can you say cortisone cortisol injection, stress hormone. It is a short-term swing high for sure. Do you want, which one of these do you want to hold price? It's making all these attempts to keep getting down here. You always got that 15-minute here. It's got to give up the bottom of this 15-minute one here, otherwise you're just inside the consolidation here. It's either got to break lower or break higher out of that 15-minute one, and you're just squeezing, compressing. So your hope that you're going to get the blowout to the downside, because you got to lose the mean threshold of this 15-minute candle right here. If it supports price and suddenly explodes to the upside and gets on top of the 15-minute, which is also a 4-hour, then yeah, this, I'm rooting for you, Derek. I'm rooting for you, buddy. I'm trying to find some support for you. You want to go down? Where's our carrot? We gotta get Derek the carrot. We gotta put the carrot here so I can smell it. Let's see. Come on down. That's hilarious. Did you just not see that there's the hilariousness of that? You're welcome, Derek. I'm feeding I'm feeding the algo for you, buddy. Come on. Come on. That could have been timed any better, my friend. Oh my God, people are going to think this carrot is magical. Oh, that's a good end to my day, my friend. I couldn't have timed that any better. Oh, man. Just below the wick of the consolidation. There you go. You're out, man. Oh, man. That was entertaining. I got a dumb butt trade earlier. Demo. Note to self. Don't trade against the daily bias unless it's clean entry. Yep. Just got out at all the sell side stop losses. I need a bite of the carrot. Oh, look at that. See? That tasty little carrot. Let me put it down here some more for you, Derek. Oh, that was funny. That's good. All right, so now you've got an impulse leg down, fair value gap, equal lows, a lot of wicks and crap in here. Pop back up just inside here. It'd be nice if this stayed open and you just traded into it with one wick and then short it from there. Again, I'm not touching this. I'm not touching it now. We got the afternoon session is about to start, or your 2 o'clock session. This could turn around and book it straight back up, or it just go auguring down. This could be the gunner from there to there, that whole candle down, from here, next leg down. And that could be the only chance to get on right there. Not that I'm encouraging you to do that. Let's wait for some cleaner stuff. We've been beat up enough today. Imbalance. And you've got another 9 minutes before a silver bullet presents itself. Kirk said, I just found snow. I just finished snow shoveling and found jade in the yard. Here, carrot. Just trading micros. Kirk, you need a radiant driveway. That's what they got down in Florida, those radiant driveways. Nice and hot. We actually have some guys up here have those hot water or heated driveways, just so it melts the snow on their driveway. Watch this candle close. That's what I mean. Saw a guy in Buffalo on YouTube put one in for $10,000 himself. Pretty impressive. Yeah, they're great when they work. You get minus 30 days. It ends up takes a lot of energy. You gotta be one of those energy hogs that don't mind burning a lot of natural resources just to warm up your driveway. In Canada, it's kind of impractical, but I've seen them out there. So that's it, back into that imbalance, that little tiny price imbalance right here. There's another little tiny one right up in here. There's one right here. Order block candle. We've got 5 more minutes. If we suddenly get a run back up into here for a short, this is one of those, I want to see a body get below the low again. It didn't. This body finally break the low, and it came back up, traded to the low nicely right there, short. Yeah, look for this price leg down. Oops. Damn it. Get rid of that thing now. There she goes at the carrot. Burp, burp. Hey, buddy, you're welcome. I'm happy the carrot, I can dangle the carrot for you. Oh, that was funny. So that's awesome, Derek. Have a great day. I'm out of here too. I think I'm pretty much done. I'm not even really looking at every candle anymore. I'm just kind of, I've lost focus here. So I'll stick around for another couple of minutes, see what happens. I'd just like to see it tag our carrot one more time here. I'll put it right down in here. And then if it hits this one here, I'm out of here. And we'll see you guys tomorrow if it doesn't hit that. What am I at? 5 hours today? 4 hours? Take care, buddy. Three more minutes. All right, 2 more minutes. Did we pick up any new subscribers today? Ooh, 2 more people joined the happy group. We keep going like this, I'm going to break 200 before the end of the month. We've had a 15-minute candle close below the BISI. See that? Short. So run back up into the BISI is fine. We'll see what happens now. Oh, she's getting ready to shoot. Getting ready to shoot. That's a cat. That's a cat pounce right there, boy. He's ready to snap down. That cat's ready to roll, man. Okay, so looking for a silver bullet in here for a short, unless it takes off on us already. I could just tell by looking at that candle, it's ready to run. He's ready to snap down. Create a silver bullet. Give one person a chance to get in for a short and get the fudge out of town. I know there's no silver bullet there. I'm just keying off of the order block. There it is. The carrot has been. La, 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 la. Let's put the carrot down here and really give it some temptation. Where is the carrot now? Okay, well, we finally hit our objective for the price leg. Bang, right there. Done and dusted. I'm just trying to go short here now for this low down here, this rejection block. Run these lows. I could tell just by looking at that thing, it was like a patting cat, patting its little paws ready to pounce. Zappo. You can just see that in the candles. I'm going to move to a break even. I'm going to move to some. I'll take a couple of bucks out of that. There's that. The carrot again. Let's move the carrot a little lower. That's 480 bucks. I'm out. It's going to go lower, but I'm going to get out right there. Take some money, move her to the sidelines. The carrot did its work today. Happy carrot. Got down to the rejection block. Took my piece out. That's me ending on a high note. How's that? I'm going to put the carrot down here. For those of you who are still short, I'll tempt your tummy with a taste of beta carotene, my friends. I'm going to put the carrot down here. I'm going to move out. I'll see you guys tomorrow. I love you all. It was a lot of fun. I enjoyed myself this morning. And thanks for everything. You guys were great fun. Enjoy your afternoon, my friends. Be kind to each other.